Da, 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 da. Hello, good morning. Good morning. Yeah, 457 is kind of my key level, and we pushed beneath that yesterday for like a minute. So that could be just a sign of things to come, except that, of course, this morning it bounced and landed on top of it. There you go, 456. I think that the desire to go down is really strong right now. I see a fundamental problem with AMC, so it's going to be a bit different today. I'm going to be working on a bear chart. Oh no, a bear chart. What? Yeah, it needs to be done. We've talked a little bit about downside, and the fact is that if you look at my ideas, we'll just call them ideas. If you look at my ideas, there's a pretty solid concept here that is ultimately still kind of bearish. Like when I had talked about going up to like 860s or whatever, the common thread in a lot of my language was the same, which is like you're going to go there, but you're not going to stay there. And you're probably going to come back down and go back to low liquidity. There's no part of me that really ever thought about a method that would go up, just break out and keep going. It's not impossible. It's also not impossible that we get more temporary bear side in order to get bull side. So if like you were to ask me what's my outlook, it would have been like really short term. I was kind of bullish going into that bottom that we're kind of sitting in still. Bullish short term, bearish a little more like midterm, if you want to call it that, like 3 to 4 to 5 months out, and then bullish long term, as in within the next year, moving up very, very far. So that's just the nature of the market. You have swings, and I don't think it's that complicated. I really don't. I think there's part of us that really wants to see upside, so we don't tend to focus as much on what possibility there may be short term to go down. And I think that the reality is that you have what I'm calling like a non-starter. So there's an issue right now, and I know that I've actually been arguing this all week. So I've been saying that AMC is very delayed. It tends to delay often. It's not usually going with everything else. It's kind of like the last one to go. And those are things that I've actually been arguing about all week. Like I've been saying that like nonstop. So on the one hand, you don't just throw that out and say like that can't be a possibility. It's totally a possibility that the idea of this being kind of a non-starter isn't really that black and white. There's a concept here of, okay, well, yes, there are times where AMC has absolutely delayed in the market, and I've been making a case that that's what it's doing right now. But I've already made that case. So, like, people are going to come in here on the stream, they're going to hear me talking about possibilities that I haven't talked about this week, and they're going to be like, why are you talking about that? Well, because if I'm wrong and it's not bullish here, then you need to have an idea of what the alternatives are. And I don't think BearSide is like, I still can't see BearSide as like going down to $1 and then bankruptcy. That's not in the books here. I don't believe it is. So for me, like that's not what I'm talking about here. For me, what I'm talking about is just charting other possibilities that haven't yet been charted. I'm not overly discouraged, but I'm like getting there with AMC right now. And so the idea of us coming through what we've gone through and then not breaking out, it reeks of possibility, but it also kind of makes you sit there and question, like, am I really going to break out here, because at the end of the day, what we needed to do hasn't been done. It just hasn't. And what I'm seeing is I'm seeing a high amount of volatility, a high amount of volume, and I'm not seeing the movement. In reality, we've made certain moves that look really good. We made a double bottom on 417. We've made higher highs after that double bottom. We seem to have advanced over a really important level. We've been trying to build a support above 555, 560. All of those things are positive. So like, this is not me being bearish. It's me saying that there's something that's not quite right. It's important for us to recognize when something's not going the way you think it could go. And to play the contrarian to your own game is really important. You need to be willing to sit there. I think this is for me. You don't have to believe this is true. I guess that's not really something I can make you believe. But I think it's very important. I think it's really important to understand what downside looks like here. Because if I'm not right and it doesn't go up, and this high volatility, high volume is really just them coming up to sell off above 460, we need to know what the rest of this looks like. So I haven't spent very much time on that, so I wanted to really focus on that today. And it's going to be a bit annoying, I think, for some people. You're gonna have a lot of people come in that say in the chat this morning, that come in and say, "Wait a minute, you're bearish now." Just know that like that's just people being people. I'm not particularly offended by that. You feel free if you need to speak up. You can speak up and say, "No, he's not bearish." I don't really care that much if people think I'm like bearish all of a sudden. That's not really what's going on here. But I understand where that's coming from, you know. So just so you know, not overtly bearish here. I'm just watching 457. And what I'm doing is I think I'm doing something that I need to do for myself, which is to be responsible and make sure that I have this set up the way that I want it to be in terms of what's possible for downside. And if you're not doing that, you're not going to be prepared if something doesn't go your way. So what I'm going to do is like really carefully kind of rebuild these parallels, and I'm only going to keep that main creek there and maybe the other one going up. But what I really want to do is focus on, I might even do like a fib channel today. We'll see. Need to unlock this. So I really just want to focus on the lower channel. I don't really want to focus too much on the highs, because that would be us like, again, doing the same thing we've always done, which is just to kind of look at only the highs and say, well, where's where we're going to go when this happens or this happens. I've already got 4 charts for that. So I'm not worried about what happens if it goes up. I'm much more concerned at this point of what happens if it doesn't go up and we continue to kind of fail to advance here, and what this could mean if it is indeed an LSPY, as some folks have already suggested. And they may end up being right, you know. So you have to kind of take that into consideration, all possibilities, so that you're aware, okay, if this is what happens, I know what this is. I'm not going to sit on like a bull trade, for example, if something goes wrong. And I don't think I need to explain it much more than that, but that's as far as I want to kind of take it there. So I'm going to do something a little weird. I might use a channel. And then just to kind of help me define this downward motion here, you can tell in my voice I'm not overtly optimistic about today. Now, somebody said something about GME rocketing up. I don't think it's going to go to 30 right now. It already hit my targets pretty much in time with where I thought they would. I would be surprised if it went to 30s today. I would. I'm not saying it can't. You can see RSI is kind of building back up. So if it breaks out here, maybe you get an extra push to near 30. But it's met my targets. Like it hit the range. So like I'm not particularly interested in seeing a higher high right now. Like it could happen, but I don't think it needs to. Like this is quite literally where I thought it was going to be. So I'm pretty happy with my call out there, and to see the move happen before it happened is always nice. But if we don't get a market like lifting today, we're going to get a slump. And frankly, where AMC is at right now, it's just at the verge of coming down, and it's going to come down to probably 450s. It's already made the weakness. I said yesterday, it pushed below by a decent bit yesterday. It went below the main support here. It's been teasing that 457 quite a bit as if it's going to try to hold it, but you can see it went below and then it goes back up to sell back down, and that's what happened this morning. And now they're using that to try to sell down and break below. So that momentum that you saw this morning was purely just fabricated momentum to try to drive the price back down to this floor and get it low. There's a secondary support here on the 454 that we'll kind of watch as well, because that was where the lower bounce was here. But I honestly think 457 is a stronger support. So I'm going to kind of stick with the idea that it's already broken that. It's probably going to try to head to 450s. And Max Payne wins again. And those people that were talking about it early in the week can rub it in my nose, rub my nose in it like a dog in the poo. It's like, yeah, way to go, Booksy. You were all ballsy and talking about how Max Payne wouldn't always win, and here it goes again, right? Eventually, it won't, but I mean, it's not now. And frankly, the fact is that this has just been completely stuck in the mud since Monday. We had multiple days this week that were basically like full retracements. So we'll see. Maybe, we'll watch it and we'll see what happens. If there's some kind of a breakout on this downward motion here, we may get something kind of crazy on a Friday, but very, very rare that happens. So it would have to break this creek. I genuinely think it's just going to try to go for a 50% at 451 or a 68% retrace at 440s. And I think that'll probably be all she wrote this week. And I think part of the reason that this has been so bothersome is just the amount of volume spent to keep it in place, I think is really what gets me frustrated, perhaps, is the word. I don't know. I wouldn't say discouraged as much as I'm just kind of frustrated with the stock. And that happens sometimes in AMC. Everybody gets frustrated with it. I'm only human. So we're going to be watching that today. If you're watching the stream and you're just coming in, just know that like it's not me sitting here being like, oh, I'm a bear now. It's more like there's some things that needed to happen. We talked about it early in the week. The things that needed to happen only halfway did. If you get the extension up but you don't get the support, it hasn't happened, right? That's the confirmation. There are some things that are really good. Like I mentioned, the double bottom here is good. The fact that we were holding support all week over these 450s, pretty good. We were at one point holding support here above that really long-term trend, which I think is frankly like probably the most important trend we have. And so those are things that I don't want to kind of toss to the side just because, like, it's not, I always say don't throw the baby out with the bathwater, which I guess is a very outdated saying, but that's how the saying goes for me. So for me, I think we're kind of on the verge of a breakdown if we don't get this move above. It's that simple. And I'm not going to be caught with my, I don't know, there's all kinds of ways to say. I'm not going to be put in a situation where I don't have any kind of plan if it goes down. And there's a lot of folks out there that might think that that's somehow like being wishy-washy or something. I just call it being responsible. So I think that you have to have that. Well, I do. I think I need to have that plan in place. Part of it's also just emotional well-being. I think you need to know what to expect so that you're not like full of emotion if something doesn't go the way you want it to go. You're not wailing and gnashing your teeth, about every little move. So I'm going to try to do something a little different since I've got this set up. It's kind of redundant, but the reason I'm doing this is because I want to get the, oh, is the low, yeah, it's right there. So I want to get the midpoint, because I think that we're kind of on it, and we're kind of not. Because that green line I drew is a little bit high, and I'm curious. Yeah, I'm curious about that. So actually, it kind of makes it better. It makes it look better, because you're like, well, look at that. You know, it's not exactly on that mark. That one's slightly off. Maybe you're not in such bad shape. I still think it's really important. It's still the thing that's causing us resistance. It's kind of sandwiched right now. Yeah, but this is higher up here. I think it's the same spot where we are now, but it's higher up over here. It's probably this trend. I mean, that's that simple. It could be that this is not the top, because I'm not technically going to the top of this move. It kind of begs the question, if I just raise this up. Yeah, maybe that's a better way to do it. Just raise that up till it's at that peak. So I need to make sure this is well established before I go through and try to do an analysis on potential bear side here. Yeah, it's all right. It's not perfect, but it's pretty darn close. Pretty close. Let's take this up a little bit more. It's tricky. You can't see the angle of descent on that thing. All right. So then what I'm going to do is use this orange line. I'm going to copy that. I'm going to put that right on the gap, because that's where it should be. I know it's like really close to where that gap is. That's where I want it. And then we'll make this a little lighter. It's not so heavy. And this top one, it's starting to look like it might be actually even distance from the other side as well. And the reason I put it there was just simply because that's where the top here is. And then you can see, like, when we came down early in the year, that's where we kind of hooked. But I wonder if upon resetting this a little bit and getting the better angle, it's right here. Isn't that weird? So this line comes from way back in 2016 on the breakdown. You can see the established up and then down here. Isn't that crazy? It's not respected. This kind of indicates you might push forward later. You're pushing out that creek, which is quite right. It pushes forward, then goes down for a spring and breaks out later. Makes a lot more sense of what we see here, because again, that's like that top region. We had talked about that already, but that was that top region that has the kind of the resistance there. And there's a whole nother slew of parallels, but again, we're not going to really focus on upside right now. We already know it's in the 8s if it goes up, so that's kind of it for me. I'm not going to like go beyond that. I think it's up here. We've already done this like 12 times, so that'd be boring. Keep doing the same thing over and over again, hoping it's going to go that way, and if it doesn't, it doesn't. So right now, if you can kind of see by the chart, there's certainly been some attempts to try to get over that value. So I've got both on here, and I actually think both are used. So that midline is now raised. I have like 2. The reason I did that is because there's another marker here, like a higher wick. It seems to be quite respected. Now this has actively been like a distribution zone locally. And this is what we were saying yesterday. I think we were talking about yesterday was like the from the bear point of view, this is just another time to sell, because this has been trapped in like a downtrend. And there's all kinds of like people out there doing analysis on it, and a lot of them keep dropping their targets to near 4, which isn't exactly very complicated. It's not like very hard to analyze and say, oh, it's going to stay here because it's pinned right now. So the nature of it is quite simple, is that it's having trouble advancing. There's other things going on. We've talked about these downward motions. So we're going to have to use those today, because if we talk about downside, we have to talk about, I think we use that one, I think. It's kind of interesting. We have to talk about the downward facing creeks. So when we did the upside, we've been looking at predominantly, they've been looking at those trajectories to the upside and what that might mean. We did all of the sine wave analysis to go up, but nevertheless, a failure here, and it's not looking great. A failure here to advance, which is kind of where we're at. We're just not moving. And I knew today, being a Friday, it was going to be kind of like a low volume day. And usually on a Friday, we get less viewers as well. So it's going to be like shouting into the void, maybe. You have to have like an overall kind of, again, unbiased look at it. So we're still going to do it. And if it goes down and people are not prepared because they only tune in on the green days, then that's not my problem. And people can always come back and watch this anyways later, I guess, if they really want to. Like I'm so important. All right, let's do the analysis here. Let's stop chit-chatting about it. So that's the downward creek locally. That was met. That's the big cross. I think that's a pretty good one. And then we've got the 417 level. We need that back on the chart for sure. I'm going to go pretty far back with this one. So we need to start looking at this like big picture wise. Sure. So one way to analyze this from the bear side is to basically take this motif here and apply it right now. It's not exactly one-to-one, but it would be a way to look at this as like a potential that's coming down, pushing below here, and then hooking to the upside and failing to do any kind of continuation in order to go low for a spring. So it may very well be that we're currently indicating where we want to go, but we're not able to get there. When you look at what happened back here, just again, why, when this distributed and went bear side, why is it that later when we come back, and specifically on like the 15th of May when IWM kind of hits its peak, we're basically right where this was triangulating. It's essentially like a cross section, right? I think that's no accident. I think that's pretty typical in the market. And so this deviation goes away from where you think it's going to go, and then it comes back later with more strength, as if it's doing like a big pull down and then a slingshot. Now we had talked about this already because we had talked about stuff like this as one, whoopsie. And we thought, well, maybe it's already gone down. You know, we talked about the bigger ones. Again, this isn't really about upside, but we got to kind of address the elephant in the room, I guess. So talked about this one, which is pretty steep. You know, there's a number of these that clearly exist, and they're all kind of slightly different. They're basically the walk down, essentially, on your waves here. If this is it, then you've kind of already gotten there, right? If you got like the lowest possible one you can get here, you've pretty much already gone to where you think you're going to go here. This is where I think a lot of that 480 came from. So certainly there's an issue of like, hey, this is kind of flattening out. That's pretty normal. So we're talking about down, we're talking about, well, if it's not finished with this kind of reactive move down, then what do you make of it? Again, this is more of like a short-term thing because in theory, again, if it were to break out anyways, by the way, I'm not going to sit here and kind of belay the point. We'll just kind of go back to the other chart. But if it doesn't, then you're really looking at, all right, how did this kind of navigate through the bottom. It's actually pretty clean too. I like that one. That one might even be better. I like that one a lot. How did this navigate down to the bottom before it came back up? So there's a couple things that were interesting back here. One is you have the original sign of weakness here that ultimately pointed towards the bottom. That was pretty straightforward, and I think that this actually was like a trend to some degree. If you kind of go back and look at these points like this, you can see this is already pointing down, and then it goes and meets it again. So there existed a trend already that it goes to meet. That's an easy way to see it. Part of the reason why I thought it was going to go to mid twos to threes was that that existed. Another part of the reason is that triangulation is pretty darn clean. I mean, if you had just even these two original points, all you needed is two lines. And as soon as you see this first build out, which is frankly during a bullish uptick, this is bear side, right? What are they trying to do when they sell down? Right? We're going to advance and go up because we're going to come back down, but where are we trying to go? You can see the direction. It's pretty evident. You could have pinpointed it essentially all the way back here in September. And I did to some degree do some of that. We talked about it when it failed here to continue up higher, that it was probably going to go back down to 6 and then maybe continue. And I don't think I was using like the big chart like the way that I am now anyways. So we know there's a possibility that we're doing something pretty similar to what we see here. Albeit maybe it's a little different. There's a lot of similarities if you look at RSI. So if we go back and we check out the RSI, you're holding out on us, Booksy? You knew this the whole time. Like I said, I think a lot of this comes down to interpretation of what you think the operator's motives are here. I've been pretty vehemently, talking about bull side all week because I think that that's the motive of the operator. But it's not a hard stretch to look at this and find bear outcomes. I think that's the nature of TA, is there's always more than one motive, right? And you're just trying to think which one wins. The thing that kind of freaks me out the most about this one, and probably where some of your guys are like, this is what's going to happen, right? Is this essentially looks like an iterative motion. So we talk about iteration, we're talking about a repetition of motion. So like this move right here, okay, on the big picture, it looks really similar to really this whole move here, but I wouldn't include necessarily the whole thing. Probably, no, you kind of have to because it goes all the way up to the top. It really looks very similar to this whole move right here in terms of like where it's going. You can see proportionally there's a lot of connection in terms of this drop down. Like you can see that this move here as it goes, and I'm talking about a very small percentage of the chart right now. I'm talking about this January area going down, but this has a lot of resemblance overall with the M cross coming down, and then the reaction to what we see on the big picture. So I didn't say you were going to like it today. You may not like it. You may be like, I'm done with this already. But it is very similar. So that move right here, very, very similar to what we see on the small term right here, which is just kind of a shallow S-curve, right? Why did I think it was going to go up to like $13 or $14 anyways? Because of that, right? So the reason I bought in down here in May wasn't because I just got lucky or because I was like, oh, RSI is doing something. It really was because of the nature of this move, and what happens after is usually an auto reaction. And so that was where I was looking, and I'm like, the auto reaction is going to come way up high. It's got to come way up to here. So the nature of it was kind of clear, like it should come up to near 13s and 14s. I thought it might even get up to 16 at highest, because I was like, well, I don't really know if that drop counts here at 16. That is built upon, I guess you could say, experience in seeing how this plays out over and over again on the chart. specifically on AMC, there's this very simple guidepost of, hey, if it goes down in this kind of a motion, this is like a stopping motion. And you have an LSPY here in the middle, which represents kind of like a cat ear type motion, right, coming down. And that's usually where it signifies kind of a midpoint or like a support point. So then when you look at the next thing, which is the bigger reaction here from the bottom up, it looks more prominent perhaps on RSI than it does on, you know, the other time frame, than it does on, excuse me, on price action. But let's just do this. I'm going to do, it's going to be a little bit confusing because we're talking about iterations, which means we're talking about layers here. So I'm going to move this kind of below just to kind of keep it a little separate. And I'm going to do another one here to indicate that's what I think about that. And then the next action is actually all one action up, and it's its own thing. So we're going to color that differently so that you can just visually see it better. And that way we're not confusing. And this is a little bit off, but you get the idea. That might not be quite right. But you see that motion here results in that big move to the upside. And there's a lot of similarities in terms of like how this sets up here and breaks out versus how it sets up here on the big picture and breaks out. And we don't have a lot of secondary actions there. We just have the one. So that's all we get. We don't get this extra push at the end. This does not reach a high until the second push here, and that's when the RSI hits a high. It does come back and retest the moving average on the daily. You can see right there, and the same thing happens right here on the daily. Now the rest of this is probably going to annoy you because you're going to be like, well, how long have you been looking at this? I saw this a while ago. So when you go back and you look at the overall picture here, there's a kind of a similar motif in the bear side here. And the idea that this has to be one-to-one is kind of silly to me. So for me, it's not about like, oh, I saw it a while ago, I just didn't tell anybody because it didn't fit my own purposes. It was really more like, I don't think that's the way it's going to end up. And there was a lot of reasons for that based on the way this was setting up. Maybe I should have presented this a long time ago. I don't know. Probably would have been a good idea, some of you say. Maybe. Maybe. So you can see in the pullback, there's a lot of similarities to this same motion here. So one of the reasons why I didn't think this was adequate as a comparison, and I'm just going to start right off the bat by kind of debunking my own bear thesis, even though I'm going to still run with it in a minute. One of the reasons I did not think this was a great analysis of the range was because it's missing some pretty key elements, in my opinion. So like one of the things that really bugged me about this was that there's almost no secondary top. So when we had talked about this, we talked about MPW quite a bit. MPW is not everybody's favorite stock. A lot of people in here aren't even invested in it. But what was really significant was that second peak, which did go higher, acted as like what could be seen as like a phase B top. It was in the same place that I expected AMC to run. It was at the 13th of September. Everything was right where it needed to be. And when you go look at this, I did a whole day almost comparing this to 2020 AMC. I legitimately think it's essentially the same. And what's bizarre about it is that the setup itself is so similar, and yet when we got to the same point right here on the 13th for AMC, we did not advance. We kind of stalled out. And it was at that time that I started looking at what does downside look like if we use that analysis to our benefit. And what we did is we used we did something kind of weird. We went through and we did this kind of upside down analysis. I don't know if you guys remember that. Some of you were here for it, but we started like back here in March of 2019 on MPW, and we looked at this motif and we found that this matched invertly, right? If you invert it, it matches a lot of what you see in both IWM, in GameStop, in AMC. It was like a really common thread of how the distribution might look, and specifically what this first push down actually represents. And what's weird is that this same kind of thing applies in reverse as well. It's ultimately deciding direction way later on, and it's a way of distributing. But bizarrely enough, maybe not, when we flip it upside down and we look at it compared to, let's say, like a AMC 2020 kind of thing, we actually found that there's a striking amount of similarity in terms of the build-outs, which again, it makes sense because sine wave theory is that if you come into a bottom and it creates that M shape, those defining features stay relatively the same. I think what was most striking about it was this early connection between what happened really early on in the range and then what the result is later. And you can see it visually right now, like this kind of looks like AMC, right? Like we're just kind of staring at these charts half the day. You kind of get, you kind of get tunnel vision, but like, doesn't this kind of look like what we're experiencing right now on AMC? This is an inversion of MPW. So the idea is that this was a top on MPW, it's inverted, that AMC may very well be going into a bottom, but notice how long this takes to kind of come back down. Again, really, really similar in terms of like a gap down bottom, like this would be compared to your like $3 gap down bottom, right, on AMC. The same kind of thing applies for like the breakdown. There's like a pretty consistent like breakdown, reaction, cat ear. And this is where I got to when I was looking at AMC as like, what if this is bearish? I was kind of looking at this as like, well, where have we seen that before? All over the place. You know, this is not like unique to MPW. It's not unique to AMC. Like this kind of emotion where you're wrapping around this kind of early, maybe we can call it an LSPY or a preliminary support even. This kind of motion is basically the structure of like a ton of these stocks. I mean, it's like it's all over the place, right? It's a really simple way of getting either a sell-off or a buy-in, getting all those people shaken out and then advancing again. What's incredible about this is it's like, again, it's like this, it's everywhere. We found it on MPW, we found it on I'm not going to be able to do a side-by-side on this chart. We found it on MPW. We found it on AMC. And so when we look at this, again, it's like I want there to be, of course, I want there to be like a bullish outcome if it's possible. And I want that bullish outcome to be similar to what we've seen before. But at the end of the day, like that's just something that you can't ultimately control. Like it may happen, it may not happen, and then I lost one of my screens and I don't know where it went. So hold on a second. I have no idea where it is. Where did you go, screen? I removed one of my tabs and now it's disappeared on me. Oh, there it is. It took like half a minute to kind of build back out again. It's probably just streaming and stuff. It's just lagging a bit. So of course you want it to be a certain way, but you have to then take into consideration like where have you seen this kind of price action before? What happens if it doesn't go the way you want it to go? What does that look like? So when I look at this as a motif, it's like it's easy for me to see within itself a repetition of pattern. The reason I just kind of discredited that early on was because there's a particular motion here that I found to be kind of interesting, and it didn't get, we weren't meeting the same criteria, and I'm not going to go into that like too much right this second, but it had to do with actually I'm on the wrong chart here. It had to do with this move right here, I think, if I remember right. So there's a move after that cat ear here that goes all the way back up, and it goes pretty high into the distribution here, and it, from a horizontal standpoint, it kind of looks like it's almost at the exact same level we're at now, because you're like, well, it almost looks the same, but we're at the same level, you know. But we've been sitting on top of it, which is a big deal. And then at the same time, we've been like, it had to do with this, like, I guess what I'm saying is the hook itself made it a certain criteria, it went a certain distance, and ours is like really high. And so I was like, well, if it's going to go if it's going to go there, then it should meet that criteria, right? And it hasn't really met the same criteria. So there was a comparison that I made a while back to this. And you're looking at this now like, well, great. This is probably why so-and-so thinks we're going to go to $1 or whatever. Yeah, but I don't think that's necessarily what happens here. That'd be kind of like putting the cart before the horse. Because basically what you're suggesting then is that this is going to do this and come all the way back down and go even lower. Like, no. Because if it goes low, even if it dropped all the way down, like in a straight line almost, like this does, maybe 190s. That was something that some other YouTubers had called out. That's pretty low. But in reality, like looking back at what we see in 2020, this doesn't ever come back to the bottom again. It just comes back to the floor. And the floor is different than the bottom of this wedge, or the bottom of this downtrend, right? Some of you guys are like not happy right now. I can feel it, feel the tension. But this is where I kind of was cutting my teeth anyways, because I was saying maybe it comes back to the twos. And I had a lot of people saying that, no, that's not going to happen. What's weird is that even in the midst of everything else, like I still thought, even if it went up here, which I was like, oh, it's possible, you know, maybe. Even if it went up here and it did an up thrust, that it doesn't necessarily have to go past like the 8s. And the argument was like, I think if it moves, people were saying like, oh, it's definitely going to go, you know, way beyond that. And I was like, what? I don't think so. I think it does this. And my argument has always been that it's really just a matter of them trying to get liquidity to bring the stock back down. If you don't need it, you don't need it. So if they're absorbing buying right now, and it's kind of the counter thesis to the bull side, if they're just absorbing the buying right here in order to then continue a sell down and breakdown, then ultimately this isn't a spring, right, where it dipped low and has a double bottom on support. Ultimately, it's an LSPY that's failing to advance over the creek, much like what we experienced back here. And you would expect there to be some kind of a big sell down. Okay, it's just that simple. But this is where I think the comparison in this particular example kind of fails to satisfy, because if you think that it's just going to do the exact same thing, then you think this is going to go to like 0, right? Because you would be looking at this saying, well, proportionally, this should be way down here at like $1. It's going to go to $1, Booksy? That's what you're saying? That's bankruptcy. No, I don't think so. Because again, looking at this big picture, it's like, look, the motif here, and I'm kind of jumping between like 3 different things, okay? So I'm going to there's going to be like back and forth between 3 comparisons here. And I think it's hard to, maybe it'd be a little bit hard to juggle that. So let me type it up real quick. So there's basically 3 comparisons. I'm going to call it BearSide, kind of like B-sides. on like old discs and stuff. There's 3 BearSide comparisons. So one is iterative, that's to itself now. That would be like, how is it trading now? 2 would be 2020 bottom. That's another one that you can use. And then the third would be a more generalized, but it's like a comparison to other bottom top structures, because you can use either one, just have to flip it. So we're going to do all 3 of those, and I'm going to be kind of flipping back and forth a little bit. I'm going to try my best to keep it concise, but you know me. So I'll do my best, but no promises. Sorry. I want to do everything I can to keep it as concise as possible. So how about this? How about we focus on one at a time, Booksy, instead of jumping back and forth? Because right now you're just jumping back and forth. My point in saying all that was to say that like this is the iterative. The iterative move would suggest that you're going to come down like ridiculously low. Like in some ways, the suggestion would be like you would drop like way down here. That doesn't make any sense for a number of reasons. Okay. You can do what you want with fractal analysis and say like, oh, it's going to be the exact same or whatever. But the truth is that it's never exactly the same. It's always proportional to where you are. And so this was definitely triangulated back then by a number of things. Another being like there was a creek cross here at the 50% marker. That was another significant tell right there that you could have looked backwards and seen a roughly 50% cross there, you know, on this wave up to then come back down. That was another part of the comparison I did way back here was I did the waves down. I don't know if you guys remember that chart, but I had like a wave and then another wave and another wave. And I was like, yeah, they're all pretty much pointing to the same spot because that's the direction they're going. So that's something you can also look at, again, from an iterative standpoint. Okay? So what does that mean? It means that in theory, there could be a very simple way of doing this by just taking this and looking through and it would be difficult to know if you should use this top or this top, but it will change the angle a bit. Pretty much you would just be using this as like a guidepost for maybe where you go later. Like this is a halfway point, this is kind of your peak, something along those lines. Difficult because I don't really know where exactly you should place the top line in this particular case. I think there's a couple different places you might want to do it. This one to me looks pretty solid because it's where that, and this would be our comparison to back here. This is where the what do you call it? The, man, Booksy, get your words right, dude. That's where the sign of weakness was, down here. So I think this is a pretty good one as well. And so that's just one methodology of kind of identifying, is just kind of looking back at trajectories and saying, well, this was the halfway point on that move. You know, maybe it needs to go low here. Definitely a possibility that it's pretty much on the halfway point. These things are rarely ever like perfect. So what I'd probably do is look for some kind of a guide, and there is one right here. You can see the second downward motion on these two hits is also really similar, and then there's another breakdown right there. So there's clearly like some kind of a wave that's directing it downward. Notice, of course, that this is not, none of these are really lining up. They're kind of making it seem like, oh, if we're going to go down, we're going to go down by now. It literally looks like right now. So what are you going to just drop overnight all the way down there? I don't know. It doesn't really make a lot of sense. Those are the things that you kind of take with a grain of salt because they're just trends. Like they're just trajectories. They're not necessarily going to be perfect. You'd have to know exactly what to look for, exactly where to look for it. And we don't have the ability to get it right every time. So maybe this would be a better one, just kind of snapping it going out into December. Okay. So that's pretty low, but it's also close, if not like kind of right on the button of where we might expect there to be a drop if it did kind of break down. It's pretty close to that floor. So it's consistent with maybe our expectations of what we might see on a drop down. We're coming low, but we're not coming ridiculous low. We're coming down to the twos, but we're not going significantly below them. That's certainly a possibility. Okay. It's there. You don't have to like it to see it. All right. So we're talking right now about purely like iteration, like just itself. What does it look like if it doesn't break back up first? Okay. So that's one way of doing it. Looking at this is like, okay, it's going up, it's trying to hook, and it's failing. I think another thing that kind of bothered me about this comparison was on the RSI on the daily. When I looked at this, I was like, well, there's certainly a strong case for it. You can see the breakdown here. My other problem with this is that ultimately that is exactly what a shallow S-curve looks like, which is literally what we see right here on the chart. It's like you see the exact same thing when it breaks down and goes into a bottom. So there's a bit of a challenge in that, yeah, I can see why it would do that, but I also kind of feel like at the same time, it's a little redundant. Like we've seen that appear in other ways. So we could look at maybe RSI as a guide as well here because it is helpful. And so one of the things, again, I was saying kind of bothered me, I keep flipping around, was that the breakdown here didn't ever come back up. That really bugged me. So this is another reason why I thought it might go to near 8 and then come back down, was because the ultimately, like, the hook here didn't really satisfy like what I felt was most likely on something like this, because like there's a wave structure here in the breakdown, and how this comes across the breakdown is really important. And I didn't think it was kind of satisfying it, to be frank. There's a lot of markers that you can draw. This one will look like it satisfies it pretty well. You're like, oh, it's definitely satisfied at Booksy. It's already over. So it's hooking right now is what you're saying. I'm saying it's possible that is what's happening. And then there's other ones that just don't satisfy it at all. Like if you go from the bottom up, that actually meets it pretty well, but it doesn't meet it on the larger structure. And then if you don't look at it on like the daily, you look at it on like the 4 hour, it's completely off. Like it's nowhere near the top at all. Like the 4 hour structure seems to lead you back a little bit farther, but it lacks like the conviction of that up thrust, because this actually pushed all the way back through, and on the 4 hour it kind of meets it and goes through it. It's a very violent move, you know. There's just pieces of this that don't quite work. Like it's missing, and I've been saying this for a while because it didn't do it here either. It's almost like it's missing like that last move up before it comes back down. Like it never got overbought, things of that nature, right? Even though it came all the way down to be oversold. So it was like, again, you guys are probably like, well, it looks super similar, so why would you even think that this is bullish? Because to me, I was like, well, there's probability here that this goes up into December in like an S-curve and actually hits the peak and then breaks down. That's more similar to what we see in like 2020, where you get pretty overbought multiple times, right? Before you come back to earth, so to speak. There's a continual like push up, you know, to come into overbought territory in order to flush down and get to this low RSI that you get here before the divergence happens, and that's the end of November. So like, again, there's a lot of issues with what's going on right now that it just doesn't quite make sense. Like it looks like this is going to get this kind of big flush in order to go lower, but I could easily go on another time frame and make an argument that nah, it doesn't need to go any lower. It could just drop from here. It doesn't need to go up here, you know, so on and so forth. Tricky. Okay, I think it was designed to probably be that way to keep us, and we're below 450 now. It's definitely going down today. But I think it was definitely designed to keep us kind of on our toes and think that there's a possibility this kind of rallies because of where it is. It's sitting on like a place where it's sort of working in a way that you would think that there's a possibility that it comes all the way back to the top again, and it never does. So, yeah. So anywho, if this breaks down now, then what this is essentially just a big hook, okay? And it is, as Stockfather described, as an LSPY. We've already talked about that a little bit, you know, and what that might mean. Again, I could kind of keep going back and forth as to why I didn't think that. I don't want to belay that point too much. There's a lot of reasons, mainly dealing with this area right here versus this. It's just very different. There are still plenty of distributive elements. We talked about them when they happened. Like I remember when we didn't cross up here in August, being like, that's not good. You should be crossing up now, because that was the cat ear, right? So you could have crossed up right over here, and we knew that. Like we knew that wasn't good, and I still said, well, technically a wave could go down and still be healthy, because it does do that, and that's called a spring, or it goes low for liquidity if it doesn't cross up. And then the same thing applies here on the 13th, where we looked at what happened on like MPW, and it did take off, and it went to like exactly where I thought it was going to go, just like I thought AMC was going to go up to the 8s and 9s. MPW did it exactly like kind of in step. AMC did not. So liquidity wasn't there to do it for whatever reason, or they didn't need it. And then the fact that this traded really high and not on the bottoms, that's very different than what we see here back in this one. In this one, there's like no comparison. When you look only at where you're trading, this is definitely trading like 100%, I would say, without even a shadow of a doubt. This is primarily trading in the bottoms here, and the tops are just flushes to the upside. You know, I've got a lot of stuff obscuring it, but hopefully you can see that like almost exclusively it's trading in the lower 50%. That's exactly the opposite of what we have now. So I think that as a rule of thumb, that's usually a good indicator, but in this case, it may have just been misleading. Again, I'm taking a bear side today to talk about the potential here for downside. And I do think that, yeah, it's potentially that was just kind of one of those things that's kind of misleading. I don't see this as trading dominantly in the lower half. It's just not there. Like almost all of this is this upper 50%. And that to me was like really bullish, because typically you don't see that unless there's a lot of buying pressure. The idea of like camping out high to get sell-offs is one thing, but the idea of trading high is another. So like, meaning like the idea of up thrusts to go get sellers is totally normal. And to try to do it repeatedly is normal. But the idea of doing that here over months and months and months and not successfully trading low made me think that it was not like this, right? Where this is dominantly trading on the bottom half, this was dominantly trading on the top half. So again, maybe a broken interpretation of that information. Maybe at the end of the day, you know, you just go back and you say, yeah, I was wrong. That's it. You completely misread it. Why are you even doing charting? You have to have some kind of come to Jesus existential crisis meeting with yourself. It's totally possible, you know, that's where this goes. Because frankly, like a complete misread of this at this point just kind of makes me want to throw out some stuff that I've been using, and I'm like, meh, you know, maybe that's not even that valuable. But yeah, this to me was like very evidently trading in the lower 50%, and this is trading in the upper 50%. They look very different. So I'm still arguing that this could have been bullish, and maybe it's not. The pattern itself obviously looks very similar, okay? So where would it go to? I think the argument here is still the same argument that I was making before. If we're just using the iterative motions, and I'm not doing the other comparisons just yet, but if we're just using the iterative motion, the argument was always $2 or thereabouts. Like it was always down here. You can go to my other charts, it's still the same. The idea was that this would be like an up thrust that would then drive you like a 50-50, and we talked about it down to the gap. And then after you get to that gap value, and it's like right there on the dot, you know, right at that 50% here is like 5. And that gap value is where you would hit first, and then you would kind of like bounce out, you know, and then come down low and ultimately like meet these targets over here. Why not go right to this date on December 11th, Booksy? Why not just dump straight down to December 11th? You're talking about triangulation back here. It was super accurate. Why not do it there? Part of the reason, again, is because of the second comparison, which is the 2020 bottom. So in 2020, there is a creek that's just never met. There's multiple creeks here on the first push-up that just never get met. They're never revisited. They do indicate, to some degree, like where you go later. If you're kind of paying attention, you can see the downward motion, the desire to get back down to, at that time it was like 2s, right? But the desire to get back down low was there, but the creeks themselves, the triangulation of those creeks is never met. So even after like this kind of goes up and does the second top, which I guess we haven't done or we're not going to do, it takes a really long time to get down here. And then it ultimately, like, this is your stuff that's happening around elections and earnings, kind of like now. The second drop is what gets you there, but there's no connection at all to some of the earliest creeks. Like, they just don't go there. You never get to them. They don't triangulate. So part of the reason that I had sort of thrown it to the side, not in like a bad way, just kind of put it on the back burner, was because previously AMC did triangulate, but it did not ultimately go there at that time. It would be like us asserting that this was going to drop from this point, this was going to drop all the way down in a straight line to here. That would have been the assumption at the time, in saying like that's where it's going to go when it gets there. And that's happened to me so many times on AMC that I kind of just feel like it's not worth stressing about. Like, it happens so many times where there's like a triangulation that I've made, and then it doesn't get there for like 4 months. And it used to be when I was on like Twitter or X or whatever, that people would like come at you and say like, this is why I'm like always saying I'm defending other YouTubers who are like making call outs and they're not reaching it. And I'm like, yeah, but you never know. It might get there one day. And then they'll be like, oh yeah, I was right. Because that happened to me so much, where I would see like a clear bear target. I thought it was triangulated. Same with BullSide. And then it doesn't get there, but it does get there. It doesn't get there on the time that I think it's going to get there, but then it gets there later. And during this motion, everybody's like, was like, this is why I just could not stand Twitter. Everybody's like, during this whole motion here, everybody would be like mocking you and saying you were an idiot for like thinking it was going to go down lower, and that where's your target at? You know, I got those kind of comments all the time. It was just an absolute cesspool of judgment, and it's horrible, right? But like, that's what you would subject yourself to, you know, if you were saying like, I thought this is going to go here at this particular time. So part of the reason like I wouldn't have looked at something like this and said it's got to hit here at this particular time is that reason, that in the past that's not really been the most reliable. And the same thing with upward intersections. We already know that because we've had a lot of those. Some of them did hit, like the one back here in July hit. Some local here have hit, but then we've had some big ones that just never went. And you're like, well, when's it going to go, right? Same thing right here. When it started coming down, and you know, you're Booksy, you're me, and you're talking about how you think it's eventually, beginning of this year, I made a video about how I thought it was going to go to 14 and then come back down. It's maybe 250s. And you're looking at that like, there's no way, dude. It's like coming down. It takes time, right? So I think that a lot of the targets we have long-term are going to stand no matter what. And then I think the same might apply to these bear targets. So like some people have taken upon themselves to kind of mock or deride or, you know, disparage other people's work on YouTube or whoever or wherever. Some of those targets may not be wrong. Remember when Nick P, and I'm going to defend him. I don't know the guy at all, and I'm not going to defend any part of his character or attitude, but just in terms of his, because I don't know him. But just in terms of his call out, remember back here when he was saying he thought it was going to go like 190, and I was like, no, I think it's going to go way up first. Okay, well, I ended up being right, but there was an element of that where he may end up being right long term. Like this could still come back down to the twos and hit low, and who knows, it may hit 190. He's not wrong in what he probably saw if he saw it and it was a legitimate target. It might never go there, but the idea that things could just take longer is really important when we look at the market. So for me, I'm like, look, obviously, those things may not triangulate perfectly, but they should at least to some degree signify to us like potential targets. So this is still a potential target zone according to iteration. It's still a potential target zone according to 2020. There really wasn't any question in my mind that that was the case. More so the question of distribution. How does that distribution happen? And I've been asserting for the greater part of the year at this point that I mean, it's just the truth, right? The greater part of the year at this point that you would get this kind of move back up in a big flush. And a lot of that's based on the size of this move, what we have checked, what we haven't checked, so on and so forth, okay? So those are things that we would want to consider for downside in terms of targets. For RSI, I don't think it's that complicated. Ultimately, this flush did result in a bit of a divergence here. That's not to say that you have to get one this time, but it might be wise to suspect that it could be similar, This may actually end up dumping low, but still the RSI may not actually come down that much. I think that's kind of supported here by the RSI being where it is. If you were just to go back and look at, you know, the downward motion on the cross here, it's not exactly like super steep. It makes you believe that, okay, if it came down by the end of the year, for example, like the 30th or something like that, even if it took that long to get down there, it may not be that low, you know. It could be very simply like just here, you know, and not actually to a new low. That will stand a little bit in contrast with what we'll talk about with maybe a little bit with 2020, but not much. So, all right. So that's that. That's the comparison to itself. I'm going to kind of delete that for now. I don't want it to be like disregarded. I think it's just a matter of like kind of resetting the chart. I want to kind of look at it again with fresh eyes and same perspective of what if it just goes down and it's not going to go back up and it is hooking. What now? I think this was another one that really bugged me. Was this guy? Sorry, I'm kind of like going back and forth because I'm like, it just never reached that 5 area. Even that would have been made more sense to me than where we are. But there's something about that 460, 457 level. They just do not want it to leave here. I think it has to do with this parallel as a midpoint, like trying to keep it like trapped beneath the middle of this channel. For whatever reason, seems very, very important to the operator. So they must think that that's a very important signal for buyers and sellers and stuff. All right, so looking at the 2020 bottom, may want to do a side-by-side here. So what I'm going to do is just hide all of this. But I'm going to do it in like a group because I don't want to hide everything on the other chart. That looks like it's just hitting like a creek. Let me just look at that and see if that's actually legit. Because this other one doesn't have that same appearance. So I don't want to make it, I don't want to keep it on the chart. It's misleading. Oh yeah, because that's the this top to this one. So there is a manner of, in a manner of speaking, that could be somewhat legitimate. It is a snapped value. It looks like it's like hopping over. The problem is there's like it really is like half a dozen trends here. So there's a lot going on right here. Like if you're looking at back tests, there's so many. Like that could be back tested. This might need to be back tested at 440. At one point I had said like 444 needed to be hit before we leave. It had to do with the March setup. Again, I'm not trying to slip back into the bull mode here, but I think I was like, oh yeah, 444. And that's kind of where we went now. Again, I don't want to flip-flop today. I'm just trying to do what I think is responsible for myself, which is to make sure that I'm aware of what downside looks like here. So I'm not overzealously like considering upside as like the definite, this is what's going to happen. Yeah, that one's pretty solid though. Whatever. All right, we'll keep that for now. We're not going to look at this anyways on this chart, so we'll come back to it. You guys are come back to the bull side, Booksy. Remember, this is like B-sides. This is us looking at the other shoe, right, and seeing if it fits. So like we're gonna do our best to be non-biased on this channel, even if it means we're uncomfortable and we're having to face potential loss if you're not hedged, loss of position or money. Part of being a trader is knowing when to pull the plug on something, on a trade. It's probably one of the biggest things. So yeah, so let's take a look. I'm kind of going back and forth here. I'm just going to look at both and see what I did. So this is daily, this is daily. So what I want to do is copy these lines, and that way I have them on this chart. So when we do the comparison, we're looking at the same kind of parallels, which I think is important. There we go. Okay. That's why I wanted to do that. And we'll go back here, and now we're going to like just look at a side-by-side. And again, we're not going to focus on the iteration now. So the iteration was this comparison to what just happened, which definitely looks very bearish. When you look at that, you're like, okay, it looks bad. I mean, it just does. Let's look at now the 2020 comparison, and let's see what we can see here. Maybe as a model comparison, and see what we find. So again, I want to kind of reduce clutter here as much as possible. And let it be what it is. Because I want to do a good job with the analysis on this part. So in 2020, there was what I would call like a phase B top, which is that it comes up higher. It's a bit unusual because sometimes you don't get that second push, and the bottom might be perfectly healthy. We use this diagram a little bit. I'm going to talk about that when I talk about other bottoms, which is the third point here. But I want to make it clear like why I'm going to talk in this language, because, ooh, that was dangerous. Almost spilled my coffee. Like grabbed it with my fingers. It was weird. I'm going to talk about this because you need to kind of see where I'm coming from on this. So there's this other diagram that we use sometimes, and it's like just a really common bottom. It's what I used yesterday when I did the macro comparison, if you remember. And that's this idea that like you push up and then you have like a cat ear kind of middle, and then you come back down. And that's that, right? And then you come back down, and sometimes you make a low, but then what you do is you like chop across a bottom, and then you kind of rally back up. And this is just a basic waveform pattern. It may seem to some that this is not the same because of this second push, but it actually is the same. Like, because at the end of the day, when we talk about these things, and we do try to be as unbiased as possible here, even though we sometimes are biased. When we talk about these things, we're really just talking about a Wyckoff bottom. And what's strange is that normally, like, you see this, and to me, it's like, I've seen this so many times where it's just like an S-curve, where the downward motion itself just presents itself like an S-curve. So I actually, when I draw the diagram, if you see me draw it before, you'll see me draw it like this. Like, it just looks like an S-curve down. I don't include the cat ears in the middle. And part of that is because when we look at the big picture on AMC, like, that's what we visually, that's the easiest way to see this. But there are cat ears here. You know, we've talked about it quite a bit. They're there. I would not ignore them, right? So like one is like the obvious big one, which is here, here, then here, right? And then the secondary one is actually all within itself, here, here, and then here, you know? And you can even see it in that downward motion. If you're paying attention, that downward motion is essentially like identical here as it is to here. I did that comparison when we were going down here because it was basically 1-to-1. Again, that's the same bottom. You see that same bottom appear here. You see that same bottom, like lower wave structure, if you will. You see it appear right there on a micro level. You see it right here on a micro level. You see it right here on a, well, you see it here on a pretty big level, and then you see it here on like a micro level. And you can see even right here on the most smallest of levels, because again, I think this is actually all, again, one of the same kind of patterns. You still get that same push up, drop down, it's right there, and then the cat ears. It's just a sequence of shrinking iterations. And it was very misleading, obviously, in the end, because it was going down. You're thinking that it's going to break back up, and it doesn't. But the nature of that is the exact same nature we talk about when we talk about the master fractal stuff. Again, if you don't know what I'm talking about with the master fractal stuff, it's essentially just a model waveform. And you see that the pattern repeats in itself here, 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 until it doesn't. And then it makes a big move, right? So all of these represent kind of like the same exact motion. If you were to break them into like pieces, you can see that those bottoms do appear in multiple places in this chart. And so we have like a ton of examples based on this very same motif of like what this looks like. And that's present here going into and through this top. But a lot of times when I do it, I just kind of do it like this because it's easier, right, than drawing all this other junk out, okay? So why I talk about this, we're not quite to the other bottoms part yet, because when you look back at 2020, there's a tendency in my brain anyways that I kind of put it in its own category, but it's not in its own category. And one of the key things about this is when this wave comes back up, it actually comes back down and makes a lower low here on this move down. And I find that to be really important because that move downward ultimately, I don't know why that's red and that one's not. I think I used the other tool. Sorry about that. That move downward ultimately is like the completion of the downside. And then what you really are seeing is kind of a wave within a wave, and we've talked about this a lot lately. And you guys already know what I'm going to say, but this whole thing is like a big structural wave, and then you're essentially just kind of walking through these motions of like checking, 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 right, through those motions. The same thing applies to this whenever we look at the same diagram of where that support is, where that drawback is afterwards, so on and so forth. It's just that sometimes, as you guys know, sometimes this does not build out the way that you think it's going to. Like this one doesn't have like a secondary upthrust. Like there's no push there, right? So it's kind of confusing because you're like, well, wait a minute. What am I actually looking at, right? Am I looking at this being a single motion up? Is that really what this is? This is all like one motion up? Because it does come higher? Maybe. You know, if you went back and you looked here at this local breakout here, you might make that same argument that, because we just talked about this, again, it's a little minutia, but you make the same argument here because this comes up higher on the second push. It's almost just like a double top. Or is this like a breakout on a second cat ear? Good question. What's the answer, Booksy? I don't know. I don't think it really matters as long as you're consistent. So I'm not going to like sit there and try to figure it out. But what I mean is that like if you think it's the second cat ear, that's fine. But then just make sure you identify the second cat ear correctly in the current setup, right? We don't want to like say it's the second cat ear and then flip-flop and say, no, really it's all part of one motion up, one big wave up. Maybe it's both, right? I don't know. But the point being is that this is essentially the same, right? So when we look at these, I want to kind of keep that in our mind because I'm going to have to do the comparison as if this has happened, even though it's not technically happened, right? It never jumped and made another jump up, okay? So even though this technically did happen, we're going to treat it like it didn't happen because if we're going to analyze BearSide here and we're going to try, then we have to make sure that we're not biased and we're not saying that that's going to happen, okay? There was no upthrust. We already talked about the idea that maybe that happened on other stocks, but it didn't happen on AMC. So what remains is what remains, right? So let's take a look. So let's look at, let's see, we're on the daily and the daily. So when I go back and I look at this, I'm just going to focus on, again, the major parts here. One thing that's kind of confusing about this one is what the heck is the is this, right? I don't know. Maybe you could say it's here. Maybe you just think it's the bottom. I don't think it matters that much except where this kind of middle is. So we're going to focus mostly on that 445, 450 area, which is where we are now. I think that's probably the most important thing right here for us to focus on. It's essentially like 450. In my opinion, that's probably the most, again, maybe 440. That's probably the most significant thing to focus on. Because as we look at a comparison, we want it to be, again, as one-to-one as we can make it. So we're going to look at that as like the middle. We're going to focus a little bit less on, hold on, just the waves at first. We're going to focus more on just the levels. We'll come back to the waves. I just wanted to illustrate what this is versus this, so we're not confused. I don't know if I want to leave that. So that does come in and touch the, it's important because it comes back to touch the wave. I really like this wave, man. I can't get my head, I can't like get it out of my head sometimes. Like it's so nice because this ultimately is where they're going. Like they're wrapping the range around that thread. So maybe we need to use that. Stop trying to like ignore it. Not purposely ignoring it. I'm just trying to like do it differently. And now I'm thinking probably shouldn't do that. So let's go back to this top. Let's go back to this top here. So we're going to look kind of at like where that breakdown was May, and then we're going to look at the breakdown here, which was in a September time frame. So we're going to have it also go to a September time frame. You know what? I think we're just going to move it down because I've already done this once and I'm pretty sure they're the same. That actually goes higher. I did a bad job drawing that. Whatever. Right. Well, this definitely stands in contrast because in this particular case, it's not even close to being, I think I already had the marker on. It's not even close to being in the same spot in terms of where the middle is. So you either argue that we haven't even gotten to the middle yet, or that it's just not in the right spot. I'm not really sure what's the best thing to argue here. Difficult, right? I'm not sure. There is another marker here that's kind of interesting to me, which is the 350 marker. I thought about that one a lot because I kept getting like 380s when I was doing bear targets early on. And yeah, I just thought that was really bizarre. So for the longest time, I guess what I was thinking is that this was, this right here, let's just do this. This all here was kind of like a middle. And we hadn't really even made, we're just kind of moving down to this creek level. And the reason I was doing that is because if you elevate this, to me anyways, I mean, maybe I'm a little off here, but to me anyways, it just kind of looked like, oh, you're just coming back down to check the wave. You haven't made a reaction yet back up. So for a while I was like, nah, it's just that. And ultimately that's what you do see. I'm going to actually shoot myself in the foot. Which is that this breaks out. I was trying to make this all bearish, and now it's going to be like bullish. Too bad. But I have to make the counterpoint, right, before I make the point. So I have to find what I was thinking before I try to debunk it. And we're dropping like flies today, guys. I don't know why people maybe just don't really want to hear about BearSide, I guess. I hate that, man. I hate seeing like the viewership just dump off of a cliff non-stop all day because I'm only on one thing. He's not talking about the 1% move we made on AMC. Oh well, I don't know, man. I'm not. I could talk about GME, and I already talked about it a little bit this morning, but guys, GME hit my target range, so I'm not particularly, I mean, it's kind of anything now is just extra. Like, I don't know. You're welcome. I gave you the target. I gave you the timing for it. It worked. Didn't work for AMC, but it worked for GME, so that's all there is to talk about with GME right now. I would get that people want to see it rally. I think it dumped. I mean, it clearly broke down. It looks like a double flush up to hit the target, totally did that. Then it came back all the way down and broke below the trend going up. Don't see why we wouldn't range out here. I'm not really sure why people think we're going to rally and go to like 30s. It's not impossible. It's just why on a Friday, why like risk it? You know, it looks like it's going to be stuck. If it comes back above the top here, 28, that will get my attention. I'm not sure the idea of it rallying again makes any sense. It did the flush early this morning. It sold down really hard to knock it back below that trend. So It looks to me like the wedge completed, and now it's probably going to follow through, come back down low. Probably end up, 26 or 26.50 today. I would be very surprised if it broke back to the upside. That's all you're going to get from me for GME for right now. So for a while, I'd kind of surmised that maybe this was all part of some kind of a grand, because there was so much speed in this initial move, you have so much time. It's almost like this didn't happen the way I thought it would happen when we were going up. Remember, I thought we'd come up like slower, like it was more reasonable. But this is ultimately like all the gigantic sort of auto reaction, right? And what's crazy is that like this happens so fast on AMC, like locally. The downside was really slow, right? But it was slow over here too. It's just that it looks different. It looks a little different, Ultimately, it still builds out like the ranges that it's coming to and all that jazz. But yeah, I thought maybe because the upside was so fast that the downside here is just taking a sweet fat time, and you're still going to get that move. So this is kind of where I was looking at. We're not going to run till potentially like March or even summer of next year, because the idea is you wouldn't have to get up to this high until August if the pattern works the same. So I'm playing on this assumption that like, well, the waveform itself has a lot of time to complete. So I'm thinking, oh, it could just pop to its high in the 8s and then drop low and then come to hit the gap, rally back up, maybe going into earnings, and then drop again. And you basically don't have to leave until May or June, and then you're up here. And part of that is also because the nature of this is quite interesting. There's again, I know I said I wasn't going to do like too much analysis on this bull side, but the nature of this is really interesting. There's a timing here that's very unique in the scheme of things, where you look back and you can see it visually, and I just find that to be really compelling. There's no, oh, it's almost there, it's close enough. It's like really, really tight. So the time it takes from the time it hits that mark the first time, passes through it, to the last time it hits it and leaves is exactly the same as the time it takes when it comes back up to hit that mark and then pass through it and leave. It's identical. It's like an identical timing. And I thought that was really interesting. So when I looked at the timing here, I did in my brain kind of assume that it's probably going to be much the same. Like, why would you think anything else? Well, this is where things get maybe a little bit speculative. I get it. But it's also really compressed. So there's a difference in terms of timing, because there's no, like this looks really long-winded, but this is actually really short in our time frame, which implies that you don't actually need to spend that much time here. I don't find that to be super difficult to understand because it's overlapping the previous bottom. So there's a sense in which you may not need to trade there as much since it's already been traded before, and there may not be a lot of desire now to trade in the $10, $11 region for a long period of time. So you just really need to go up and create your SOS or whatever, and then you're done. So interestingly, again, this is kind of the way I had seen it, is that this doesn't really look timing-wise way off. This is the exact same amount of time. So if you're watching this and you're wondering like, well, is that even the same? This is the same amount of time as on the daily chart. It's the same arc, same amount of time. Well, except for the compression at the beginning and the end, it looks essentially identical. So what happens if you're wrong, Booksy? Because you're talking about the same thing you're always talking about. You said you weren't going to do that. Well, if I'm wrong, and it's very possible, right, that this is bearish. If I'm wrong, then the only conclusion that I could make is that to some degree, some of the original timing that I had is wrong based on what I did back then to do that timing. So I'd have to be like looking back and criticizing my own charting methods from that time. I think it's okay to do that, so I'm going to do it. So one of the things that I did was I used the cross trend, and this was interesting because if you go from the gap up value to the bottom, so this is one thing that I did, for example, if you go to the gap up value to the bottom, this actually gives you probably one of the most appropriate waves that we have. And this value, again, I'm going to get rid of this. This was just me speculating anyways about how that might compare. This value right here does exist on our current chart. And what's fascinating about this is that the gap up value does happen at that intersection in the same place in our current time frame on the orange. And when you do that gap up value here, it's really high. So one of the things that bothered me a little bit, it's like right here, because I remember it's right off this guy. So one of the things that bothered me a bit about the current setup was that it took a really long time to get across this marker, and then it starts heading low, kind of like we are here. And you're like, well, it's the same, man, it's the same. Bear with me. We're not doing the bull side here. I know that there's an argument to be made that that's really similar, but then I'm about to spit in its face, okay? In a figurative sense. Because this is super, super steep. So remember we were talking about like going to 13s and stuff? That's what this would imply. Maybe even going to like 16s. Really, it'd be going up and pushing this creek right here. Again, part of my original bull thesis here was that that was where you would need to go. There's other reasons that you might expect to do that. There's an interesting little rise here on this trend. This is creating what we would call like an uptrend, right? Because you made a higher high. So what you would do is you would look back and you'd say, where is that higher high and where is it going? So on and so forth. And one of the things that's really fascinating about it is if you connect those two peaks at the top, this actually ends up being pretty much the launching pad, a target launching pad for later on when we leave. I took this same parallel and I applied it to where we currently are. So let me do it with a different coloration. That's not impossible to see. Let's just use pink. I took that same thing and I applied it to where we are. I took the exact same line and applied it to where we are now. And what I found was that there was quite like a compelling comparison to be made. And I don't know, I had to go back and find the line that I actually made. But I found that there was a really compelling comparison to be made because when it came down to it, and it wasn't quite this steep, this is a little wonky. But notice that these two peaks, so it's a little off, but then again, this is not exact either. This is where the drop happens right here. And then there's another peak on the other side, so it could be right. I'm not sure. This doesn't look the same as the first time I drew it. That's what I'm trying to get across here. But it does hit right here. And that's what we're trying to use as like a criteria. So again, I'm going to present you with what I thought was going to happen and why I thought it was important. This is anchored. This is like an anchored target. It definitely seems to me that this was positioned to go up to like 13s in November. You guys are like, well, that's next week, Booksy. What? Right? Of course, it makes you excited because you're looking at it like, that's going to happen because it happened back here and it's just waving up. It's just waiting for the last possible second. Maybe, if it breaks out, and it's not doing that right now. So we're going to have to kind of hold our tongue about it. But here's where I'm going to debunk it. You were waiting for this because this is about the bear side, Booksy. You're doing the bear side, Booksy. You can't be just talking about upside all day. No. So here's where I'm going to debunk it, okay? So there's a 53-degree angle right here on this trend. When you do the cross trend at the same angle, and I'm going to try to make sure it's pretty darn close. So that's 5309. Let's see if I can get it right on it. It's probably not going to be an exact mirror. I'm going to have to go with 5313. You'll have to forgive me. Never. When you go with the cross trend here, which is the one down, this gives you a really compelling waveform trend. This is your trend up, wave up, down, down. Really simple. And it's nice. It's clean. It works. And it actually looks fairly symmetrical. And then what's fascinating is that this is actually the breakout point. Again, there's like two markers here. One is perhaps more important than the other, coming off this green line, which is the midline. pushing away from it, right? Compressing beneath it, and then between that and the wave, and then pushing above it, okay? The other, maybe less important, but still there, and that's the build out above that. And then ultimately that creates the creek down. It's pretty much identical, and it makes sense. Again, up, down might be relatively the same, especially if you're looking at like a wave up trajectory, wave down trajectory. That's typically very, very close to accurate in the market. So for speed. So the problem is that this is way gone now. So using the same measuring approach does not work. 34 degrees, 3409. You guys are like, well, maybe you should just use it with extended hours. Maybe. This is like, this ship has sailed in our current time frame. This is what bothered me a lot about the move not happening back here in September. So this again, this is the September 13th break. And so it did cross up and over, but it failed to jump this guy. It's almost like an inversion of expectation. And then this is what I started using as kind of a center point to some degree. It's not a center point of the bigger wave, but it's a center point of the upward and downward wave, right? Maybe for timing purposes, you could use that. Notice this trajectory does intersect the bottom at the right moment. It does intersect the bottom down here at 240. Again, triangulates really well to a potential bottom at 240 or lower, maybe even higher up, I guess, if you were using this one. It would be like up here somewhere. It's better with extended trading hours, maybe. Yeah, so I'm not using it though on the one, so I shouldn't use it on the other. So there's that, right? There's that. So then this is where things get kind of dicey, because as much as I would love to say, oh, it's going to break out on the 22nd of November, it's going to be hitting 13s, the more I started to stare at the chart, the more I realized there was a disjunction, there's a disconnect between what happened here and what happened locally. Like one of the things that really stood out to me was that this top actually comes into that little pocket range right there, which we were calling like a resistance. So going backwards, it's the same area that you're seeing with the green and the orange, or the yellow, or excuse me, the white and the orange. It's no different. It's the same line. It's connected over time. And one of the things that really stood out to me about it was the fact that in this previous time frame, the first push doesn't actually come up to the top. So it kind of begs the argument that maybe there wasn't enough juice there. They came back and got some and then went forward. And again, it makes a higher high. So ultimately, like this high does reach into there and hit it. So that's one counter argument for this, is that, yeah, that's true, Booksy, that could do that. You could have like a phase B top. Some of that kind of magically lines up. Some of it doesn't. Some of it seems a little off. But then here's the counter for that. You have a problem in this analysis in that there's no need to come back up that high. This is where things started devolving, because I said that I didn't think necessarily 13 was needed anymore. You know, for a long time, I felt like 1380s was going to be the golden number. There's this very clear intersection of levels there, creeks, trajectories, everything. It just seemed like a no-brainer, like it's going to go there. Then I started looking at the chart and I'm like, well, if you think about need in the market and liquidity in the market, if the idea was back here that you didn't go high enough, this is all one move in some ways. It's like a wave up, down, up. You don't really need to go up again now. There's no reason. You know, the only reason I could really find is just to check some boxes with these lines. That doesn't matter to an operator necessarily, unless there's a liquidity reason. So it would have to be to test higher liquidity up at 13s and check this creek. Is it possible that that's what's going on? I don't know. You know, maybe. Again, I don't find there to be like a compelling enough reason for that, because there's no creek back here, so to speak, that needs to really be checked. like there's no comparative creek right here for this second move. The only thing the second move does is it just pushes the resistance. And if you've already done that in one fell swoop, then the argument would be against it that you don't really need to do that. So it's starting to become like a thing where it's like, well, why would you even need to come back above the 8s if that's the case? You don't need to push the resistance again. And there's the secondary objective here of like, well, maybe it was just defining that line more. Maybe that line is really important to cross. Maybe that is a really significant one because of what's established back here. I don't know. Well, if you don't know, then you can't possibly be right. Well, I don't think you can be right with 100% certainty. You might be right with some of the method that you're doing, and then the rest would just have to be kind of falling into place, you know, just because. So I don't really know, you know. And then I look back at this and I'm like, you know, there's also this kind of argument that maybe this is just distribution and you're not using the tops. You're just distributing off this angle, which is then later going to use as support, because that's there too as well in the reaccumulation that happened in April. That's the build out, the jump right there. In which case, this doesn't really need to be breached very much at all. You see how you start making a case for it, and it's like, oh, really, all I did was shift the line down, and all of a sudden it looks correct as well. This doesn't seem as consequential. It just doesn't. The only other thing you could possibly do here, I suppose, is to not draw out this line the same way, but to draw it wider, and instead to use some kind of another method to like determine where this is, right, in the grand scheme of things. I don't know if you can do that either. Well, Booksy, maybe it's not that it was from the bottom to the gap. Maybe it's something else. You know, what else have you tried? You can't really do a 50-50 here. It's too high. It doesn't really work on the cross on downward. It comes too steep. There wasn't really much else to go off of. There's no other really major trends here that look obvious. It's kind of an ugly area on the bottom. A lot of wicks and weird gaps and stuff. This really made the most sense to me. It seemed to follow through the best. And so I'd have to like kind of by default, I'd have to look at what happened during the breakdown. Like this would have to be of paramount importance. So this is the drop on the first trend here. And then this is the drop on the second trend here. And that's what I'd have to use because there's nothing else to really use. So where does that happen here, Booksy? Don't know. It's a really good question. You know, maybe by doing that, you kind of ignore some of this stuff. Maybe that helps build the case better. I don't know. It wouldn't line up with anything else down here. It would purely be like some kind of a trajectory, because as soon as I pull this off the mark, none of this lines up. So it'd have to be something like that where you're trying to determine it based on other factors here, not the bottom. So could I make a case that it's really like over here or something like that? Perhaps. You know, if we're looking at this as like a cat ear kind of business, this is the high when it started coming back low. You probably would use 520 because that's the place that it pushed up during the second cat ear. It's like right here. It pushed up high and then started coming back down. Or you would use 513. And those are the only two places that I really could think would make any sense. So the problem with this is that, and you can probably tell, the problem with this is that I'm very quickly having to speculate. And that's not really a good place to be, in my opinion. I don't like the idea of trying to make an analysis on a guess when you have other tools you can use. So it sort of became like a waste of time to like really worry about it too much. There's a couple options here for upside that are not these. And what that does, that are not the steep ones that were kind of obvious to us at first. What that does is it presents us with a whole lot of other questions, really. Because then you're like, well, this isn't obviously going to have, there's 38.75. Oh, hang on, let me see if I can get that right. This is 38.75, so we need it to be negative 38.75. You're like, that looks pretty good. Yeah, but then again, what we're really doing is, remember, we're creating like Fibonacci fans. So these probably do exist because they did walk down here. That's why I'm going to the tops on these. I'm going to the breakdown points here and here. So it should make sense going the other way that there would be something there as well. I'm going to get rid of that one because it's kind of confusing. Because again, I'm not making the case that it's going to follow it. I'm making the case that it doesn't follow it. And then this one is 34.15. So I'll do 34.17. It's going to have to be close enough. So if either of those works, you could make the case that perhaps that, and this isn't going to look like it's right along the lines because this comes after. Remember, this is earlier and this is after, so these are a little offset. You could make the case that this is indeed breaking out. It's doing what it's supposed to be doing. And really, this region right here, this pocket region, is what you're trying to get for the breakout. And you're going to push over both the green markers, just like you did back here, in the same region, right? Where you pushed up, melted through both the green markers. That would have to be the argument to be made. But then the issue, of course, with that being that you have to then take into consideration, like, which angle is that? That's the widest angle. That's 36. Wish I could get it like exact. That's better. So that would imply that it doesn't even go up to 8. If it does that, and you think that's the one, then you really can only make an argument that this goes to like 7s or something, and then it dumps. You see, like, this starts really taking apart this whole bull idea that you got to go really high and you're going to do all this other stuff, you know. You don't really need to. It could maybe present itself like an LPS, perhaps. I know I said I was going to do BearSide, and I'm not really doing BearSide. So here's the other possibility here, okay? So I've kind of worked through this a couple different ways. And you're kind of seeing why I'm a little bit like sheepish about this as a comparison model, because proportionally things have to kind of work out. Certain targets are still indicating that you would come down really low. Certain targets indicate that you could go up potentially higher to like 7s or 8s. Those are both possibilities. But there's another kind of setup here that maybe would be a little more bothersome, perhaps. And that is the kind of the more bearish outlook here. So one of the things we discussed when we talked about the 2020 bottom is if you invert the chart, there's that same pattern that we were mentioning here on MPW with the chart inversion. A lot of that still implies the other way. Now I've got it upside down, but you would look at it like this. A lot of that same kind of idea of like, this is the sell down, this is a trajectory, early trajectory, this is an early trajectory. These should be indicating kind of like where you might be going if you break out. And again, not to kind of like throw a wrench into this whole idea that this was some magical short squeeze, but this already had this level in mind, like right here. It's the same concept that we're talking about, you know, in something like this at the MPW top, where it had driven low and there's early indication that you're going to come down really far if this sells down, right? These are not really negotiable because they're past tense now. They definitely happened in that particular way. And you start seeing how those bull trends, as they appeared on AMC, for example, how those bull trends really, if you flip the chart and make it look more bearish, maybe easier to kind of be a little bit less biased, they really exist early on in the chart. The more I stare at these charts, the more I think that it's complete and total bullcrap that this was not planned. I think the buy button removal was a panicky thing, but I think the overall motion was 100% planned from the get-go. Like, I just can't make an argument any other way. You go back and you look at the chart and you're like, well, it's all there, you know? Like, it's pretty much all just showing you the same things over and over again, even like to this degree. It's the same way you would analyze any wave, you know? And so I find it to be quite frustrating, you know? On the one hand, it's like, yeah, all this stuff is there from the get-go, and in the build-out. There was no magical short squeeze except for the people that got caught in GME that didn't realize what was going on till it was too late. But I think your operators 100% knew they were going into a sell down period and were planning on coming back up here. Who knows? Maybe they weren't. Maybe they weren't ever gonna go up higher, but I digress. No one has a clue what's about to happen. Well, then why are you watching a YouTuber talk about it? That's disparaging my work. So you're saying that I shouldn't do this, I should just turn it off and go to bed. What about GME? You think that I had no clue this was going to happen a week ago or whatever when I drew this out? Make up your mind, you know. It's like I'm either full of crap or there's some legitimacy to what I'm doing. And if there's some legitimacy to what I'm doing, then you can hang out and like learn some things and we can talk and explore stuff together. If there's no legitimacy in what I'm doing and it's just all me just spewing garbage out of my mouth, then I just got lucky the dozens and dozens of times I've called out stuff or said that it's a top or said that I thought it was a bottom. But it can't be both. It just can't. If you were looking for me to agree with you, like, I'm not going to agree with you to the extent that you think. The idea that an operator plays a game that's really tight and that's hard to manage, hard to understand, that's not for retail, that makes perfect sense because they're not trying to give you all the answers. But to sit there and say like nobody has any clue what's going to happen, it's pretty disrespectful to me. That's the way I hear it. Maybe you think I'm being overly sensitive. Maybe I am a little bit, but that's just the truth for me. The truth might be, yeah, I'm a little sensitive about it, and at the same time, it's just disrespectful. It is. If nobody has any clue what's about to happen, then why even be here? Like, why sit in a YouTube chat where people are talking about charts? It doesn't make any sense. If you're saying, like, as a generality, I've been watching a bunch of people and everybody's confused, then we know the operator is doing a good job. But that's not the way I hear it when people say stuff like that. I really hear that what they're saying is you have no idea. Because you're saying everybody, I'm part of everybody. You have no idea what's going to happen. Well, okay. Then I can't trade the stock market. I'm dead serious. You cannot trade the stock market if you have no idea what's going to happen. You are literally gambling. So yeah, is there truth that the operators make it very difficult for retail to understand? Absolutely. Is it true that there's a mixed bag of indicators that one thing shows one and one thing shows? Absolutely. All that's true. But give me a break, man. When this was coming down and I said I thought it was going to go back up to 14 and then come crashing back down, give me a break. Why in the world would I think that's going to happen? You think I just guessed those numbers? I pulled them out of a hat, fortune cookie, spit it out of my mouth. The stock's going to go to something up here and something down there. I literally said it would come up to highs of like near 14 and then come back down to lows of near 250s. It did it in a little bit of a backwards way, but the idea is like that's part of technical analysis is understanding what's most probable. You're not always going to get it right, but to say like you have no idea what's going to happen, you might as well just not trade the stock market. Like don't trade the stock market. And if you're going to trade the stock market and you don't want to do any kind of analysis, at the very least, pick a company that doesn't have billions of dollars in debt. do not trade AMC because AMC is as volatile as they come. It's got problems. It's got cash flow issues. It's got debt problems. It's always been the underdog's tale. Always. It's a contrarian play through and through. There's literally hedge funds right now buying this that are specifically called distressed hedge funds. They're there to buy distressed stocks that they think are going to recover, but that currently have some serious issues. They think that they're at a value right now, but they have serious issues. That's literally what they are. There's there's a lot of companies that are like that than when you look at AMC's sheet of who owns it. This is not a company that's for the light of heart. Go buy something that's got long-term high potential. Buy it because of the fundamentals, and then don't look at the market ever again until you're ready to retire. Don't yank your money out every time there's a big crash. Just be patient. Yeah, there's no reason to sit here and watch a chart. That's all I'm trying to say. And to say that, I know what you mean. It may sound like I'm not attacking that. I'm just saying, like, for my defense, like, I'd be wasting my time. And I really would just be lucky. It's very disrespectful when people say that, like, they say that kind of stuff and then they say stuff like, the broken clock is right twice a day. It is. There's obviously elements of chance in the market. If you're not 100% sure, then you are relying on some unknown factors. That by definition means there's some chance involved. There's unknown lurking variables, things that I can't control as a statistician. From my point of view, that is a game of chance in some cases. But that's not every variable. Like, every variable is not out of your control. You have the ability to control whether you buy or sell or do nothing. That is the most powerful thing that you could possibly have control over, is whether or not you're invested. So make an investment with a conscious effort to try to know what's going on. And if you have no desire to try to know what's going on and you think that nobody else has any idea what's going on, don't trade the stock market. Be an advocate against the stock market. Call us a bunch of gamblers and start a page to help gambling stock market addicts get off of, because, like, that's ultimately what this would be. Like, this would be people who are just obsessed that can't let it go, trying to trade something that's untradeable. So that's all. It's not about, the comment itself may have been very benign. I get that. And you're probably just really frustrated, and I get that too. I'm frustrated. But you have to have, if you don't have the outlook that I have, at least for now, for this stream today, then you're probably not going to want to watch today. Because my outlook today is, I had a particular set of expectations. Some of those expectations did get met. Some of them did not. There could be some variation on those expectations that I'm just not prepared for, like the timing wise. Maybe things are just taking way longer than I thought they would. But for us to be unprepared and say we don't know what happens if it drops, that's silly. That's exactly the antithesis of what's going on here. What's going on here is we're saying we want to be prepared if and when this happens. And there's if-then statements in that, right? It's not me being like, okay, so yeah, I am getting bothered, but I don't think that person's like an idiot or anything. I think that they're presenting a commonly held belief that I just don't get. And ultimately, I feel like when you do stuff like that, it communicates to me that I'm just wasting my time. And I know that if that's the way you feel, like, then you probably don't want to be here, right? And that's kind of where I'm at with it. So anyways, when I look back at this, we're going to keep going on this line of thought here because we're almost through it. We are. One thing that I would consider is, like, okay, if I was wrong about this idea that it needs to come up a second time, then what happens as a result? And one thing that's kind of curious to me is this does go above here early on. It does not ever really come back, like, unlike where we are currently, this actually pushes above again and then comes back below. But where we currently are, that didn't happen. It went really, really high. It already hit the mark and immediately comes below. There's no time where this is ever kind of pushed beyond this early push, which was the Roaring Kitty stuff. There's no real time when this is actually pushed. And so the rest of this just looks like it's been compressed underneath it and it never broke out. And we've already talked about how it kind of looked to us like it missed the boat, like it looked like it didn't go when it could have gone back here in September. So part of me wonders if that, let's say again, we're doing like a bear analysis here today, and we're doing that on purpose. Part of me wonders if that move didn't need to happen. Let's say it was here as an option, but the operator's like, we're not taking it up. We got enough sellers. We're just going to play the breakdown. We could hypothesize at this point that already happened and it didn't actually go. And we were waiting for this move that's already happened in the past, but it didn't happen. That's where it happened on, like we were talking about MPW a little bit, just because there's a similarity there in that's where the push-up happens right here. I mean, it's essentially like 1-to-1. If you were just look at the MPW chart, it looks very much like a 1-to-1 kind of push within a potential breakdown. So to do the counter thesis to that, we have to kind of go back and think about what if that didn't happen? In which case, we would have to kind of argue that somehow, I don't know how, but somehow this never crossed up. And instead it just went low and we're approaching it again. This is where I could make a bear argument. Okay, so I'm getting to the point. If indeed that's part of like the cat ear and it's not just a secondary move, I may be able to make a bear argument at this point that this is where we're getting this hook. And I have to kind of fudge my lines to do it, but I can do it. So the bear argument would be that this is not really where that bottom is, even though I think technically it could be like way down here, and I've already talked about that. That it's really like here or higher even. Well, I have to do this right, so hold on. I got to make sure that's the middle, because otherwise the arc's going to be all wonky. Yeah, so I would make the argument that it's here. Does that make sense? So if I'm a bear and I'm thinking that it's not, it just didn't go, there was no upthrust, there was no secondary upthrust, it didn't happen, then I could potentially make the argument that this is still much the same, because in reality, this did drop low after this time period going into earnings, right? And then it builds back up going into out earnings and into elections. So again, for the bear thesis, and that's what we're working on today, you would say that like this has already happened, and it happened right here, so to speak, and that's the retest of this line. In which case, the argument then becomes like, well, this is kind of bad then, right? Because now you're looking at this like, well, it's breaking down here, and that's where you would kind of rest your hat and say, yeah, I think it's, I don't know exactly how you would do it here, like perfectly, but I guess you could take an argument, you could take it to the, take it to the judge. Now you could maybe put it like higher up, like there or something, and say like, that's the mark. Again, you kind of have to fudge some things to do it because none of these really line up perfectly in terms of horizontals. So let me just make that clear, like they don't line up perfectly. But if there was a weakness here, certainly you could see why someone might look at that and say, well, it's pretty clear to me maybe that this motion and this motion are happening and have already happened. And yeah, again, I find it to be a bit bizarre that it didn't come back up to all the way to 5, but you can see it got pretty close. I mean, it approached the same marker. So we could make that argument, I think, as a bear, that it's already come up to try to test that region, and it's just failing from there, right? And then you could kind of go back and look at some other things in terms of like where these other bottoms are and stuff. I don't know. You can look at like other levels here that were supported or not supported. The point being, that's like the 50% marker roughly on this range. It's like pretty much like right at the halfway point where this is coming up. So if I'm making, again, a bear case for this, that's where I would go to. Like I would be looking at this as if That's not going to happen because it already broke down. It didn't do the move. It's not going to do another up thrust through the top. And for whatever reason, it never goes back above the green mark, even though this did twice. It just doesn't do it until way later. It's building out something lower. So you could make that argument that that's what's happening here. I definitely think you could, you know. So when I go back and I look at this, I'm like, all right, what that means two things. So number one, that means that there's no pump and flush if that's the case. And in this case, the pump and flush came from earnings to earnings. So you would have to say that the pump and flush already happened. Like that was back here, it did as much pumping as it's ever going to do, and then it flushed. Again, we've already talked about that with the nature of like how this didn't cross up. So you would just basically say that this was all kind of the same, it's just not there. But another thing that's odd about this is that if that's the case, then this didn't ever reach down and get the gap. So one of the things that did happen in this flush is that because of the nature of this and how high it went, it came down really hard. They got a lot of sellers, got a really big flush down. And RSI is a pretty interesting difference here as well, because this goes all the way from the peak to like basically like the lowest low it's going to be for a while. And we don't have that here. Like there's no peak. Nothing. Like it's just one peak by itself back here. I mean, again, maybe you could argue that it didn't get overbought enough back in this time frame on the daily and it needed to push up again because it didn't make it high enough. There's just one peak and then it hits a low, bounces out, comes up. So it's a very different read from that point forward. It's basically like here to here. It doesn't really look the same, does it? And then when you look at something like the shoulders, if you will, these little things on the side, this doesn't even like register on RSI. This was around COVID. It makes it very challenging. It doesn't really feel as consistent. If I look at the overall picture, it doesn't look as bad. Like this to me looks like pretty accurate overall. You know, I know that when we go through RSI, it's kind of a mixed bag because you have a reverse split in the middle of there. But the point is if you just go back to this hook, this early hook, that momentum still carried forward into these bottoms here. I think it's pretty accurate to say like that looks very similar to what we see here in this time frame with this momentum going forward. So again, it's like there's no like answer. Like it just doesn't. I wish there was like a simple answer to this one. So this one is a bit difficult because in this case, it's just different. You know, you can't really make the comparison perfectly. It doesn't work. It's close, but it's not perfect because the idea would have been this should have come down really low and sold down really far. And it's just not that severe. It's very mild. It never came down that low. So there's no major upthrust to drive it that low. It just doesn't make sense in that it didn't come up high enough to do that. And we're left with one more move. So the last move, this is kind of interesting because this bear thesis that we're presenting right now actually ends in like a really potentially big moment for us in January. So this is probably the most bullish short term in some ways, even though it's a bearish at the same time, because this presents an interesting dilemma that if you are indeed already here and you're breaking down, and this goes all the way up, it keeps pushing, by the way, it goes from November 2nd all the way through November 25th. We're fast approaching November 25th. I think I already have it on the chart because that's interestingly like the peak value. Remember when we were looking at 13s was on the 25th. So the idea that you'd be at some kind of a peak value here by the 25th, and then you would essentially like fail to continue from that point forward. We don't have the same kind of patterning. This was more of a wedge. It broke down pretty clearly on December 1st, came down and then hooked back up by the 14th. But the implied move here, I suppose, would be similar. You'd basically have some kind of a chop here, and then you'd push up one more time. Maybe you'd hit 5. Maybe you'd hit 550 or something. So there would be like one more move. And then you'd basically have to just kind of dump back through going into December. And then much like here, like by the 14th, somewhere around that point in time, you really would like break back below. It's just a secondary distribution. I know there's other things we'd have to imply with that, and you're kind of like, well, isn't that what's happening right now? Like, we already did that. Not so. We keep making higher highs, and we're back supports are double bottoming and stuff. We haven't really done any kind of major sign of weakness yet. So it's implied here that you could still have another rally. It just stops really short, and then it sells down hard. This is where you really get a sign of weakness, perhaps. And then you get this secondary distribution action, and this is what drives the price low. Here's where things get kind of like, again, different, because we had not really talked very much about a January move because I kind of abandoned that idea based on the overall setup. There is, in some ways, there's an implied move here of kind of a 50-50 cross, on this wave from the peak. We don't have a peak. So that's okay. You're like, well, this is getting better and better, Booksy. I think it's already there though. Like, I think you have a marker there that's kind of giving you like an implied move to some degree, And if we were to only push up to like 5, for example, or 490 something, and we broke down from there, it's pretty much the same thing right here, about a 50-50. And what's bizarre about this is it doesn't really seem to support, going into January, for example, it doesn't really seem to support much of a spring action, Like, this would only suggest that you maybe come down here, because proportionally it never made that move. So the wave is up, down, up, like this one, up, and then back down. There's no problem with it, to some degree. It's kind of like the implied move is actually fairly benign. It's really bizarre because I find it to be a strange kind of, maybe like this, like that's the halfway point down through this wave. It's really strange. Anyways, it doesn't seem like it would go low enough, is what I was trying to say. So it's bizarre to me because I'm not going to assume a lot of this stuff is going to be the same timing wise, but certainly you could make an argument given that this happened in September right here. This peak happens in like May, June or whatever, going into that time period. It's pretty similar. There's problems with that. We've already talked about it, mainly because this doesn't look like it would need to move until way later in June. So why in the world are we moving in January? I don't know. The timing of it adds up until you do that. So there's still issues with this. But I suppose what I'm saying is that there's an implication here that perhaps somehow the move could still happen in January, and then between now and then you're going to be doing a big retracement. I think it's safe to assume that this would be like some kind of a sell through here at least to get the gap, and then you might have some kind of a rebound. Ultimately, this took off around the 20th of January, so it'd have to be some kind of massive like spring-like motion in order to really get you going. It'd be some kind of a terminal shakeout. There's no way to time it otherwise. It's like it's missing too many things, so that would be it. I know. So you're kind of looking at it probably like I am, like that doesn't quite look right. And in truth, normally what happens, and this kind of brings us to the last point, normally what happens in this bottom is that you get a reactionary move at least once on the opposite side. So this is an example of one that's kind of like what we're dealing with right now. And I'm going to have to look at it on a smaller time frame. We'll probably do like 2 hours or something. And I'm not going to use extended hours because I don't need to add more to the chart and it's already there. This is a bit of a bearish outcome, but at least for what we're doing, this is probably one of the more bullish examples that we actually have, because almost all the other examples broke lower, like this guy right here when it bleeds up and it comes down in the cat ears, you can see the similar motion in the downward motion right here, the reaction. See that? You can see that similar hang time, although this stays way higher, right? It doesn't really match. This is one of the few places that you kind of get what you get in 2020, which is like you just don't get the second move, but you bleed down and then you end up breaking out and going higher. So you end up building back up to a breakdown level that you left earlier, which was over here, which is similar to what we're saying, like for the wave, is it would essentially be like a January, June type deal, right? Where you get like a big January move and then you go sideways and then you get a big June move, right? And then you break down. And that's similar to what we're kind of talking about on our current time when we talk about this like walk down coming back up to here ultimately, you know, we've talked about that repeatedly on the channel. It's similar. And there's even like a cross trend here on the wave that's pretty close, visually speaking. It's not perfect, but it's pretty close. You know, I don't think it's really good enough to use, but this one's better down bottom right there. But you get the idea, okay? You get the idea. So we're going to look at this bottom as a comparison because I think it's a good one to analyze. And it does represent a lower low. There's one other that doesn't do that I've used in the past, and that's the one right before August run up. We might look at that as well. But in terms of like the overall RSI motion, things like of that sort, this would be a good one for us to look at. Again, just to do a comparison and consider what may or may not happen, you know. So this again has a divergence on the bottom. So there's a divergence here and here. This is pretty similar to what we have here and here. The divergence is more pronounced on different time frames, but they're both divergent. Okay. You have a divergence before you break out. You get the big, you know, cat ear, and then you get like a what looks like a secondary cat ear that just doesn't ever have another advancement. You get the same thing in this time frame. Again, very small example, but we're using it proportionally. We're not going to overthink it. It's just an example of what could happen, right? To some degree. It's not going to be perfect by any means. So we've got kind of an idea now from the 2020 that you may have a target that doesn't actually come lower. So we've got 3 different comparisons with some different outcomes. One's more of like an LPS. And then the other is a spring. So this is also going to be a spring because we're using a comparison that does break down. So in this example, I like this one a lot because fundamentally this kind of works on a number of levels with RSI and waves and stuff. It's one of the places I kind of hung my hat early on when I was doing some of the analysis I was doing. And there's a lot of really good stuff here with waves looking back on it. There's like tons of good stuff here that you can look at in terms of how this moves and what's ultimately like gained through all these different moves. I think it's great. So that's all I'm saying. So I find it to be a useful comparison, so we can use it. I don't know about the timing of maybe the drops here. I'm assuming that they're not going to be perfectly one-to-one, but it should be like here to here. Sorry, I messed that up. Not the other way around. It's right there. That drop to that drop would be the similar comparison. So I'm going to recreate the line on the arc. It's just a sine wave analysis, okay? So if you're not following why I'm doing it, it's just a sine wave analysis to help me, again, make a comparison between the two. Yeah, I mean, this was pretty low. It's hard to say. We might have to find some other levels. I might change that in a minute. So what we're going to look at is the breakdown and then what happened after. So this is where it goes to the new low. This is the push up. So there's a shallow S curve there. I can see it right here. So that builds out probably just like this one did. And then it goes higher. You can see on the next push, it goes higher up. This move here does have the same markings as that move there, so we can use that line. That is the same. There is a build out right there with wicks and everything. We don't have like a parallel trend to use. We do have what appears to be like maybe like a cat ear over here. That's a difficult one to judge because really like this is the breakdown on the second part of the ear, so it should be like down low. It might be good just to say that that is indeed like the I mean, it's possible. That could be our trend, if you will. It's possible. Let me see. Let me try something real quick. Yeah, that's really clean. So yeah, there it is. Good. So this one actually does come all the way down to the bottom of that trend. So now we're getting a little bit more proportional of a comparison. Now, the answer is yes, but if you're asking about monitoring YouTubers and junk, I thought that was a bit ridiculous, but turns out there was an article by the Wall Street Journal, and they say like 85% of hedge funds have a department now for tracking social media and things like Reddit because of what happened with GameStop. Don't know where they got that number from, but I think they just asked around. I think they just polled. They said, hey, are you guys watching this stuff now? And they were like, yep. What once was done behind closed doors is now being made public. So they know where to look. Yep. So there's that. So you can see proportionally it's already looking kind of weird because this move was really big and this is kind of awkward. It's like halfway kind of thing. It is a little bit strange for that reason, but otherwise it's pretty similar. So we'll still use it. And because this didn't have a secondary push, that's why I really want to, one of the big reasons why I want to try to use it is because of that. So I want this to go backwards a bit. Okay. Yeah, so one of the things that's kind of obvious here is that it doesn't ultimately take off until this point. The bottoms could be maybe a little bit more like triangulated M crosses, but even on RSI, I mean, it's the exact same place. This is a really simple wave because it broke out. It's the same exact structure. So one thing we might say is that it doesn't break out until 355 or thereabouts. So there should be some kind of a move to 355, but it doesn't have to be if this is going to be the same, it doesn't have to be that particular place in time. It's just, it could be anywhere over here, but it would the implication is that's really where the floor is. The rest of this is liquidity dives beneath the floor. That's very telling because the analysis we just did suggest that maybe it's not going to go as low. Maybe that it doesn't go back to twos. So unlike the first analysis we did, which suggested that it goes really low, this one and the other both kind of indicate you may not go much lower than that gap at the end of the day. I do think there's a gap in here probably. I can't really see it. It doesn't really matter though. Basically, even if there was, it probably would have to be like right here. So this would be like the similar level to this breakout here. You can see it found support. So that's another one we can mark off because that's where the breakout occurs. So this goes through the lows 178.22. These numbers are crazy. Good to know where that is though. Also in that same pocket. Weirdly, this goes above it and this is below it. So both would have to be considered. And this one's like 291. So that's the zone right there that might be important. If I look back at this, I would probably make the argument that that's what they were doing, is traveling across that, like buying up through here. So this would have been like the first check, like, hey, we're going to go down and test liquidity. And they did test it low. And then they were like, yeah, we like that. There's a lot of buyers there. You get this huge buy-in. It goes up high. And then you come back down and you just chew across it. You just create a waveform out of there until you leave. You know, certainly seems possible. Something like that could happen. Timing wise, it's probably going to be a bit frustrating, but I think that you could even time this out pretty well. So what I didn't do is I didn't put a trajectory across. Again, why am I doing this? I've done this before. I did this in March to get the August move, and I got it within a dollar. So, and I even got the timing right, but it was a dance of a lot of things. There's a lot of pieces to it. So yeah, this makes sense because then this is crossing right in the middle. Usually like the intersection's pretty darn close. This usually indicates the middle of the wave, which is like the low portion of the wave. Doesn't have to be exact. In this case, it's pretty darn close to the bottom of that wave, isn't it? Like really close. So that center mark ends up being very significant. And then it builds back out to the upside. Pretty interesting. Different than this one. It's kind of offset. That's what I was wondering. I was wondering if there's like a second middle, if I needed to find it. So this is the breakdown, though. I think where we get to the meat of this is where does it ultimately have to come to break out? And you can see when it came down, this is a long time ago, this is 2021. The wave down may seem a little confusing to us at first, but it shouldn't be, because really what we're looking at is just again, I use the term M quite a bit here, but we're looking at that shallow S-curve. We're looking at that M cross that kind of stops short of being a full S-curve. And ours didn't go, ours went really low. It's also kind of wonky because it doesn't come up to meet the same mark. That's where things get kind of confusing, perhaps, because this doesn't come back up to like here, like the floor. That would have been easy. Instead, it only comes up to 505. So, yeah. So we probably would do is suggest that 505 is indeed like the center point. That makes sense because you can see the angle here, again, on that pinching is really similar. Right there. That pinch point basically in the right spot at 505. So there was a compression into that place. Hopefully you guys see that. Here, and then here. This is kind of good actually, because this one might give us a sense of low, and the low has already been hit. I'm like, wait a minute, that can't be right. I don't think that's right. I don't know, maybe it's a higher up mark, but we're gonna compare it all, so don't worry. That's crazy. You mean the low's in, Booksy? I don't know, man. I'm trying to prove like a bear thesis, so bear with me. I'm going to do my best. Yeah, I mean, I don't know how you could argue anything else here about that. That's definitely the target right there. So, okay. Well, it is what it is. I mean, we're right about 485, which makes me feel good. I'm happy about that, I guess. Even that breakdown's in the right spot. Starting to look pretty nice. This is supposed to be the bear one, Booksy. You keep flipping. I know. Sorry. Dang it. It's 485. Screw you, 485. I left you behind, man. I'm so mad about 485. I don't know why. It bothers me so much. It's always that number, man. If it's 485, this already hit the middle. That's bizarre. So what you're saying is there's a chance. I don't know. I don't know what I'm saying. I'm genuinely like concerned because I was trying to set out to prove a bear point here, and now I'm like, well, crap. This is not proving a bear point at all. This looks more like a bull point. A bull point. Dang it. Why are you so angry, Booksy? I don't know why, because it's not in the right place. That's probably why I'm upset. It's like in the wrong spot. If this were 1-to-1, it would be happening like down here, which frankly would make more sense in some ways. You can see like intersections here on these lows. Like, why couldn't we just have the flush? You could have just flushed up here and then come all the way back down to here. I would have been like totally fine with that. It would have made perfect sense to me to do the double flush around 485 and just go up to the high target that you want to get to and then come back down. Why? I just gotta be what it is. This is starting to break down a bit, so this comparison may not work. Sorry. It's complicated because like, I guess it could come lower. Like this could just be like early breakdown and then it comes lower later. I'll have to do it like that if it's bearish, but it's just not quite fitting. It doesn't fit like a glove anymore. It's like it's lingering way too long before the breakdown. But this is a completely different time, Booksy. Think about it. Think about it. I just don't know. This is where I'm bugged. It's not so much the disproportion of it, so much as the intersection here on the 21st. It's really bizarrely similar. But then everything else like completely falls apart. There's no similarity aside from just the movement locally. This is a 2-hour chart also. You got to keep in mind like proportion is different here. Sort of trying. Is that so clean back then? It would be clean now. It did hit cleanly on the daily right there. This is why I've been so back and forth. This is silly. Silly thing looks like it's trying to recover. That's what it does when it crosses up. It comes back above that creek. And then it breaks the next one eventually. So maybe we should do that. Do what? Well, so far this 2-hour chart's looking pretty good as a comparison because we got, for the most part, I mean, we probably could go to an hour and get more of a steepness there. It might help a bit. But so far it's been pretty decent as a comparison. So if we do the same thing with the RSI, how do we do that? I guess it would be like there. It'd be really low. That doesn't work. You gotta have to find like the magic time frame here because it won't work unless you do it right. Like it's not going to be perfect. It's kind of an average. You see it kind of crosses over. Maybe on a different time frame, it would look a little tighter. I'm not going to switch now. Let's start it here. So we're going to go from the place that this buys in here, that mark, which for us is here at 291. Son of a bee. How did that happen? So the intersection, if you use it on the 21st as like a center mark, instead of some of the others that we were using, because of the conjunction of those movements towards the 21st, I guess that doesn't mean much. It could just mean like the middle of that wave. Because technically this wave lasts a long time. Like much like the other one that we looked at, there's a lot of time spent on the back here, back side of this. Yeah, crap. I think we were right though. I think that was the middle. And it's very similar too. Isn't that funny? It's like really, really similar to what happened in 2020. Like the timing of that here, unless little local guy, that's like freaky similar. Like that whole concept of it coming back to the same place and then breaking out again. It doesn't look the same, you know, at first glance, because you're like, well, it's not the same. But then we broke it down earlier into these parts with the cat ear and everything. It really is the same. So I think that's fascinating. The waves did the same thing. Up, down, up, down, up. Really similar. Build out. That's kind of amazing. But that's not the comparison we're doing, right? Just like, thanks. Well, it could give us some information because it's similar enough that we could probably use this. So this is different. This one goes, let me try from the place it hits on the top. Yeah, so where it enters and where it exits, that's the midpoint. Weird stuff, man. Must be aliens. So what are you trying to say, Booksy? I guess what I'm trying to say is that there's a really strong similarity to the same comparison in terms of waveform. And then the difference in timing is there. It's quite different because the middle is different. We're using a different center mark. So this is offset a bit. And on this particular example that we're using, if that is indeed the center, this is long-winded. It's like December 2025 kind of stuff. Good to make other comparisons. Don't flip out if you're like upset with me. Why are you doing that? Everything was working so well. It was and it wasn't, you know? And that's why we're here. So what we're going to do is kind of favor the tops here on this little M. See what the rest of that looks like. It's not a lot of connection there, but there is a lot right here. It looks like it bottoms out on the second M before the breakdown. So I'm going to ignore that flush. That flush looks eerily similar to this flush right here. Yeah, somebody asked me a question about like algorithms or something as well. I think that when you look at the big picture, it's a composite of algorithms. It's not like one. That looks like the same move to me. This one and then this one. This would be the final low on the push down, and then this was like the build out, and then the final low on the cat ear. Very similar motif. Weirdly, because there's a second move there, but it still doesn't hit that low till here. So that's important, believe it or not. You guys are like, why do you care about that? It's important. Because I do, I don't know. And maybe, nah, I don't want to change that. No, we should change it. I'm going to move this down a little bit. That changes everything, but it's okay. I mean, you can barely tell that it changed. Okay, enough of that. Let's keep going. Actually, the first number looked better, didn't it? That's what you get for messing with your chart. Let's go back. I'm going to leave it the way it was. Okay, so the reason I was doing that wasn't just to goof off with the chart, it was to find this value here. And we're going to make a rough assumption that this is indeed one of the tops. And it doesn't really work, but it's not perfect, but whatever. I like that wave though, that looks good. Here. It's very clean. It looks like it's supporting the top motion. So I think it's a good one. All things considered. And then this definitely sort of seems like the appearance of the wave breaking up and down around it. Like here. And then trying again, but failing to come to it there. Again, the waves are like parallels, so you could probably take this and draw it out, like copy and paste that arc in different places. It probably would look right. So if I took this and like, let's say we just copied and pasted it and then dragged it like straight down, we'd probably find if the arc is pretty accurate, it doesn't have to be perfect, we'd probably find that, yeah, like, all right, that works pretty well. You know, there's clearly like a macro wave that we're riding and we're navigating it. That's sensible to me. I don't feel like there's anything wrong with doing that. But I'm just trying to do the comparison, so we're just going to keep that one. Yeah, I don't... Either this action right here is like hyper delayed and it's going way over to the side, or we've already passed through the middle. Which is very strange because, again, it doesn't really present itself the same way. I think our analysis is going to start breaking down and looking more bullish. What's wrong with that? I don't know. Nothing, I guess. It's just, I didn't set out to do another bull thesis here, so that's interesting right there. So the time that when this hits this intersection to where it leaves is halfway across the middle. It's too far. That's where it would be. I think it's good though because it gives us a little bit more realistic expectations, perhaps, possibly. We'll test that against some other stuff in a minute. That's about the 50% mark on the other side. Yeah, what this might be is an attempt, even though this made a lower low here, there's more selling on this side past earnings. So it may be that this was pumped up into earnings, the low is dropped, but it rebounded really quick to get to earnings, and then it slumped after, and this was meant to be the intentional move down, like the continuation. It just never made a lower low. So we could see that as a similarity if we look at this as a LSPY. If it didn't advance again, you could see how like that would lead you to think that this comes down low. And then I did not copy and paste that marker, but it does look pretty convincing, doesn't it? It looks like I did. I did not. That's what I'm trying to say. As an average, it's not bad. So we'll keep that in the realm of possibility here. You know, like it's going super low, man. Again, I don't know if I put too much emphasis on. I'm going to this point right here specifically. I don't want to put too much emphasis on like the flushes. The flushes are flushes, and then this is built out. That's cool, because then you can see the breakout right there. This one doesn't match, but whatever. It's starting to look like that pocket again, which was the other bear thesis that we had. What else can we look at here? Let's look at the distance traveled down on this flush. It was really big distance traveled. That's the 50%. It isn't. I think I was right. I don't think it's that wick. I think it's the this move after earnings. Because when it retraces, that's the 50% right here that it goes to. And it represents where this breakdown is, which is close to the top. For us, it would be like yeah, I think it would be the level that we're kind of at right now. It'd be right there. It's just a sort of a squishy middle. It's not, it's more flexible perhaps. I think it's right there. And that's the push through it. The sign of weakness right here after it tried to hold as a support right there. So pretty close. Yeah, there it is. I did it a little wrong. Good to know though, because that's about halfway from the top to the bottom. You guys are like, that's not good. Well, that's the right marker is what I'm trying to say. Again, like technically speaking, this did come up and hit that area. It hit right here. It went up into it. It's like a combination of the two moves. It's both going up. I'm very meticulous in the way that methodical in the way that I want to set this up. So if you're getting kind of bored, sorry, but I want to do it right. So yeah, there's two competing ideas. One is the desire would be to come trade across this bottom, which is here. It's trading around 350, and then making dips below it. The other is this idea that you're kind of already at the low of the wave, so you wouldn't think it would go any lower. It's kind of like that's the bottom of the wave, that's the bottom of the wave. They stand in contrast to one another, so it's a matter of perspective, I suppose. And then it makes a big difference because when you interpret this as an LSPY that then drops, the idea would be you come here, and this is the intersection, really. If you kind of ignore the noise, the main purpose of this drop was to intersect in this region right here, because this is where you're going to build out a support later. So even though it goes farther down and up at times, yada, 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 the main purpose of that move coming down wasn't to flush super low at the time. It was really just to get back to this low liquidity. Operators obviously found some there, took it up to drive it back down. I think for us, maybe it's not going to be like we push straight through it. It's not impossible, but looking at something like that, it would be astronomically low. If you just did the 50% move, you would expect this to be like at $1.70, which is really low, right? And it would have it would be there like shortly, because this gets there like shortly after the middle. It wouldn't be like way over here. It kind of gives me anyways the impression of like coming down and then doing that pump and that drop into the spring. Like that's still on the table if it doesn't LPS right there. But I don't think much else could be taken from that. I feel like it's too high. It doesn't make a lot of sense. It does lead you right back to, I mean, arguably it leads you back to this channel. So if you were just wanting to say, look, man, I don't really know much about, all this other stuff, but this kind of looks like it just leads you to this channel by March. Like, all right, maybe, maybe. Then there's another issue, which is that's essentially like the takeoff point at the same time. So the implication being that instead of this driving down early and then chopping and actually having time to trade, what would this look like proportionally? It would be like this going all the way down into like a low over here, and then taking off. I mean, it'd have to be really low. This doesn't really make sense. But the idea would be that it would go all the way down. It would have looked like that instead. And as a wave, it doesn't really matter because like both would be accurate depictions of the same thing. They're just different ways of traveling the same region. You see the rotation there. It's pretty evident. And that's because it's 50-50. It works really well. It looks right. But this, you're taking a lot of time. You're getting down there early. You're spending a lot of time going sideways here and really accumulating in that pocket where the liquidity need is. And in this case, it doesn't really look that way. It would be like, again, sort of like a bleed over a long period of time. There'd have to be some kind of chop here that ends in like a massive dump or something, So there's pieces of that don't add up. So we may not be able to use this one perfectly for timing. You're like, why couldn't it do that? It could, it's just not like the point of it would have to be the same. Like the whole reason you would come down here anyways, and we've talked about this before, would be to trade this area. Like there's no other reason to come down that low. And then everything lower than that would be like liquidity test to see if the stock is indeed going to hold. If it's actually a big bottom on a macro wave that's not going to just reverse later and come back to these lows again, it should be something along the lines of what we see in AMC, where it doesn't really have a spring that goes significantly below the floor. There's no evidence on the big picture that would happen if you go just look at the 2020, which we already did. There's no evidence it would come down that low and flush that far. So it's a strange one because you kind of have to make some serious mental leaps there to like make that assertion that it's going to come all the way down to like 170 or something like that. And not stop short of that, maybe even, again, only going to just slightly below the bottom at some point in the future. It still seems like that's more reasonable to me, in theory. And another thing here that does kind of make sense is that if this is indeed where it stops, you are getting a really consistent top and top to top. Like you're seeing that it's rejecting underneath here, and then it goes down, and then it comes below this, and it would have to reject likewise underneath here to drive the price back down and kind of walk back through all those levels. That's starting to look a lot more like what we saw in this inverted example that I used, kind of a strange example, but where you're kind of walking back through all these levels, right? So like the first level, you're coming back down, you're checking that supply right there. I know this is upside down, but it's still the same principle. And then the second level, you're really breaking down here. You're checking those floors all the way down to the bottom. So there is an element of like similarity even in this, just looking at this in the upside down land, it's freaky how similar it is to something like this from AMC, you know, on a micro chart. The nature in which these algorithmic trades operate and accomplish goals at the bottoms and tops of waves is really very, very simple. Like, it's almost always the same. When you look back on it, you're like, it's pretty much the same exact thing. You're like, okay, that's freaky, right? Yeah, it is. But it's just a measure of how they're grabbing liquidity. So, yeah, there's no one size fits all for like directional movement. It's more about, I suppose, like the timing of it. And yeah, we're kind of not sure right now just based on this alone. But what we would say is this is the middle, somewhere right here. Beyond that, yeah, I don't know. I don't know if you can estimate exactly where that bottom's going to be. Trying to use a rotation. We could use like a circular chart, but I don't like those things. You have to like lock out your chart, and it messes with me. You'd have to find a proportion that works, like a 1-to-1, and then lock it out. Otherwise, the circle will be like really wonky. And if you change it at all, it ends up being wrong. So it may not hold that much significance, but I think thinking about that as a wheel may help. Because, again, there should be projections down, and the projection through here would probably be the most significant over time. That one looks like the one that's more important, doesn't it? Like the middle, if it volleys back up. I really don't like that. Sorry for tisking in the microphone, but I don't like that implication here that it's got to go 50% below. I did the same exact thing on the other comparison, and it seems like there's no, I just cannot find an example where this does not come down like 50% below, you know, like it's always there. You're probably like, well, why does that matter? It doesn't matter. It matters because build back out is built around those half values. So coming back to the top, this does extend far up, but it does the same thing. You see it builds out around those half values. This is the lower liquidity grab. It's all down here on like the partial values, like the under halfway point. So when this builds low, it's under the curve, it's also under the halfway of the range, and it's keeping it below there because it's using that to build a low range, again, to accumulate across the bottom, if possible. Yeah, even here, like looking at where this built out a support, it's the same thing. Like this came back down and immediately builds like some kind of a support here. And that's ultimately like where that middle always is, because it's usually hitting like the halfway point and then working it up. So again, we're working on an assumption that this is indeed bearish. I find that to be fairly important observation. That this is where this ends up being. It's under the halfway. So the reason this is so bothersome to me is because this feels like the slingshot depends on that low value. Maybe it doesn't, but it definitely seems that way, you know. That's an interesting triangulation right there to this. That might be the answer that I'm looking for here. It's not that low. It's to this point right here where it's both crossing the streams. It's crossing the breakdown level and that dip. And that's where it's like really, so it shows an early advancement here, which goes to the creek. So if you didn't think these were like the same, again, they really are the same. This goes early advancement over 50% pushing, and then it's pulling back one more time. This one doesn't go super, super low. It just goes back to, well, they both go back to the bottom level. So this actually goes back to near the same spot. I'll take that back, because this goes back down to, yeah, these lower levels. And so does this. It's just back to the original low levels, not the lows that were made. And these ultimately are like weaknesses, by the way. This is like a major sign of weakness early on in the distribution up at 2021. So I can tell you guys are getting kind of bored and tired of it. Keep asking me for other things. We'll get there maybe. I set out to do one thing today. I'm doing it. Maybe it's not what we need to have happen, but a lot of people are invested in AMC. They want to know if this goes the other way, what do we watch for? Then that's what we do. But yeah, pretty cool. Okay. This triangulation may be really important. I don't see how you could have found it here, except for maybe like, I don't know. I just don't know how you would have found it. Maybe using these two tops to some degree, but it doesn't really give me everything I need. So I'm kind of curious how you would do it there. We might be able to do it here though, because we actually have that line right there. So the implication is that this marks off the takeoff point in the future. And it makes sense. It's the 50% marker as we described it. We've talked about the need to break 460, for example. Like that's because, a lot because of this. Is just rejecting against it. We may be experiencing something right now that could resemble that. Like we may be experiencing like a push back up. Like, nah, we're going to back up. This is what's going on right here. And we're just going to back up one more time and then go. That's kind of the weird part about this is like it's very possible that this could be doing something similar and in a short term and doing this and just going again into like whatever. But we're kind of not going to focus on that right now because I really want to focus on, I mean, it almost doesn't make sense to do that, but whatever. I really want to focus on BearSide still, so. All right, so there's an weird implication here, which is that this could actually tell you where you're going to take off later. This triangulates to the intersection from the drop zone, which is here. I mean, there's no doubt in my mind. Shoot, man. This is just taking me to a bull thesis again. That's where it would be. Huh. So where does it go? That's a really different really different schematic because that's like the opposite of everything else we've talked about. Every other bearish outlook today has had December 15th or something being like the breakdown point, not the point where you cross up and leave. So it's pretty different. Stupid heater's running too hot today. I'm like really warm. I wore a sweater. It was cold this morning. My house usually stays pretty chilly. I don't like it really hot. But for some reason it's running like really hot. I hate that, man. I'm like sitting here in like socks, gym shorts. You guys are like, I don't want to know that. And a sweater. And I'm starting to get hot. I'm like, I don't want to do that. Yeah. This is messed up. I thought it was going to be like way over there, but it's not. So conceptually, as a waveform goes, this could go one of two ways. What I was going to do over here was try to see if I could find a nice M cross, but it's not really there. Like it's kind of weak. There is one, but it's like not timing 50-50 at all, which is strange. I know they usually do, so I'm not super concerned about it. I guess what you would do is just look at where it jumps that creek. So that would be this value here and where it resets it. So you're looking at particular points of interest, not the timing. You're just looking at the wave peaks. Nobody's being pissy? Swamp Fox? Why are you accusing me of being pissy? When did I be pissy? I just said I'm not doing that today. But you offered one. I saw that. You gotta also read into context because you're just talking maybe to everybody there. I don't know if you're just talking to me or you're talking to everybody. And then right before you spoke, somebody else asked me a question about something else. So contextually, it's pretty easy to understand why I would think that people are asking me about different things. Maybe I was wrong to assume, but it's not hard to understand. It looks like it went to that closing value. It doesn't really have much to do with the middle. Yeah, it looks like this closed, gosh, this close is weird. At 185, it actually closed low. So it's the top of that candle. It's a strange value. Also goes from like the tippy top down through that marker. This is a weird chart, man, to use. I don't even know if that's legitimate. Can you actually legitimately do that? I guess you can do whatever you want. I just don't know if it makes any sense to do that, but I'll try. So this would be the workout, the drawback, buy up, drawback, buy up, drawback. It's already broken that, so that doesn't really work. Not sure I can find that line. Thanks for nothing, AMC. It actually looks like it's failing. If you said anything, you'd have to say it's failing to hold that. Unless the goal is not actually to be there, but to be here, where those candle bodies are. See the wicks? Now we're cooking. I think that's more accurate. Yeah, that's right where they are. That's crazy. That's on a daily. So this would be the advancement. It does push. So where's the marker? Do your work, Booksy. Find the silly marker so we can move on. I mean, it's complex because this doesn't actually work quite as well as I thought it did at first, because like this comes higher than the top here on the hook. There's really no evidence that happened here, so I'm a little confused. Like you could say this one, it did come higher than that, but that's not actually where the drop was, so it's confusing. The reason that matters is this is an advancement over that mark. So if we didn't advance over that mark, you don't really have a lot to go off of now to suggest that you would. We've already identified 485 as the center. So if it's just, hey, we need to advance over the center mark, then it works. That's adequate. But if it's, oh, it needs to advance over something like 5 or whatever up there, slightly higher, 490s, and it doesn't quite work. So it still just looks like a stock that's trying to go but not going. That's what it looks like to me. Like an attempt to go, it's just not really getting a lot of momentum. So that's basically like a fib fan line. Fib fan. And we would have to conclude that it's not even interested in going back low, if that's the case. And, I guess I'm most interested in this. I'm trying to look at where that support was. It's just not the same. What if I'm looking at this all wrong? What if I should be looking at this like the sell down here, instead of looking at like the macro, which is fine. There's nothing wrong with just looking at the macro, but like what if instead of doing that, we look at what's going on locally? What if the goal here is not that this is the macro build, but that this is the second upthrust, and then it's going to come down again in like a bigger schematic, kind of like what we were thinking before. Because on the one hand, the implication anyways was that this would come up and then just die out if it comes back over the top. But what if that's not really what they're trying to do anyways? What if we're right about both? Like that. So here's what I'm saying, like this same idea right here, this walk down with the auto reaction. this markdown right here with this big auto reaction, we're using this as a measure of like that. And we're saying, well, big picture, it could be a very similar story. And it could be that that's the wave up, or the way the wave moves. You can do the same thing though, interestingly, short term with the drop down after the big reaction. So instead of it being like as large, you just use this. The ranges are the same because 485 stayed the same. And instead of using all the other data that you have on that walk down, this is interesting. Then you just use this as a measure of like, yeah, ultimately like what's the goals here? It makes me wonder, because you can use it as a smaller wave, and I actually think it might work better. It changes things a bit because it makes it seem like it wouldn't come as high, but I think that's important. So here, you know, I was saying like, this is why this is important. I know that I'm making a lot of noise and some of you guys are like really tired probably of like this whole bear day, but it's a good day to do it. It's a Friday. You know, we've got plenty of evidence that there could be plenty of upside. One thing that's not making sense to me is like, I keep talking about it. I said it out loud like 5 times, right? I've probably said it 5 or 6 times now, which is that there's something missing. Like it's not gone down to the levels that you would expect it to go down. So on like the big picture, it hasn't made that move down. It's not even close to the same spot. And then I'm sitting here thinking like, why does it look like it's about to go back up when it hasn't even gone down yet? This doesn't make any sense. And then suddenly it clicked. The area in which this is currently accumulating looks way more like this. Like way more like this early breakdown area. And then I was kind of like, what? Mind blown, right? Because I'm thinking it's very one-dimensionally. I'm thinking about this as only in the macro view, like the biggest possible picture. Like this has to come down low, right? But that's not true. It could have a secondary move in it that's trying to get back to a particular value at the top, not necessarily where we think it's going to go way up high, but just above the recent high here, which is not actually the same on the short term. As on the short term, that high is not way up there. It's only 590. Completely different, right? Completely different story if we look at just the smaller wave. And it's amazing because like all of a sudden it was like looking at this, I'm like, wait, we may be looking at this wrong. And I'm like, well, that's because I don't have, the reason is I don't have the levels that I think we need to have. But the reality is, and I know this looks really nasty, I don't want to go into the rest of this, but the reality is that if that's the case, if they're not able to get the liquidity they need to drive it low, but it's still kind of lining up like, it looks like it's going to run. It looks like it needs to go low. Which is it, Booksy? I've been saying maybe it's both. Like shorter term needs the pop before the drop. And this is starting to make me think that I'm right because the shorter term, it is a sign of weakness. Like it is a sign of weakness because it came down. So like short term, that was what I was saying earlier. This is like a weakness because it came below that previous bottom, indicating that you did want to go down. But they don't just keep going down, right? Like there's a second wave here because it goes up, does a massive distribution before you go down. We could talk about this all day. This lines up later with some other stuff, yada, yada, yada. But and that might be true, and that's where we're going with this. But this back here, it is a sign of weakness already, and it's kind of back to the original thesis again, because the suggestion with all that is that you have a low of 410 here, and then this has a low of 403. It did push below it, not by a lot. Not like here, but it did push below it, and that might be why we're seeing so much continuity to some degree. Because I'm like, why is it not way low? Because it's trading across this region here, just like this was trading across that same region. That changes things. It changes things because now, instead of having like a macro arc, we have a different one. Where do I go with the daily? How do I do this? Let me think. It has to be after the sell down. I can't use any of this other data. I have to just use this. There's not much here to go off of, so I'm going to have to go to like the 4 hour at least. So during this drop down, there's not that many wicks. There's only one on the 4 hour. So I'm only seeing 2 possibilities here. Here we go again, I guess. Yep, that's the 660 area where that breakdown happens. That would be the high. That'd be like saying when it was walking down, these are all preliminary supports coming down, trying to stop the sellers from selling, just like this. This is hard to see, man. The big one's easy because it's like huge. But these smaller ones are not easy to see. It's right there at 470s. That's the first hits here. I think we're right. I think I'm right. This is getting complicated. This is so easy because there's like a clear level here. We don't have any of that at all. It's actually, we need more data because it's such a small move. If I knew where it was, it could be triangulated. Because this is triangulated right here. Like exactly. So if I knew where that support was, I could triangulate it exactly. And it should click. Everything should kind of set into place. We don't have that many. This is possibly one. That's the $8 one, $8 or $9. There's a small interaction on the way down. Very small. There's 2 wicks. One's to 879, one's to like 905. So let's just kind of split the difference. So that's maybe. The other one would have to be this one here at 7:30. That's actually used quite a bit here. There's a lot trying to hold support right in that area. Okay, there's some possibilities there. Gosh, that's mad slow though. That's like super slow. It's like slow motion. Hmm. Dang it. It's just off because this took way too long to build out on that side. So it makes it seem like the wave out would be really, really slow if it were to take this path. It's like too slow. Kind of works. Waves within waves is what we're talking about. We're not really doing anything like super profound. We're just looking at the wave within the wave, because there's always going to be a possibility that you have a slingshot, which is like where you go up first then down, and you're doing that across the larger wave. We talk about that quite a bit, so I think you guys know what I'm talking about. I don't need to like belay the point anymore. I think you pretty much understand where I'm coming from with that. Yeah, so that's the advancement. It does look pretty close to right here. That works. It's really right where it should be. Even if you raise it up here, it's not that bad. I'm looking mostly back at this data. This strikes me as interesting. This. The interaction on this wave early on is pretty striking. And now we're coming back to that same push down area. Yeah, it goes back to that peak, through that peak. That doesn't seem wrong to me. And this actually makes more sense of like why we opened here below it, with the conjunction of that and the level. The rest of this doesn't make any sense. This is way too slow. This is moving too fast. It would be like you should be breaking above, which I guess this does. This breaks early. Yeah, maybe that's what happens though. Maybe it goes up and it takes a really long time. Maybe it chops sideways. That'd be one heck of a thing, wouldn't it? That'd be so different from everything else we've talked about. Like a longer term distribution that does do what we think it's going to do in going up, but then it takes forever to like finish. It goes until like March and then it drops. That would be crazy. That'd be so different. So different. That would look like nothing else we've charted so far. The idea would be you'd rock it to like 660 and then you'd be like, well, that's not high enough. Well, the thing is then it comes back down and then it actually, that's pretty wild actually. It's pretty crazy to think about it in those terms. And then it does go up to like near 8s or even like a little bit higher. Like it does go up here in like March or April or something. That's the weirdest thing I've seen all day. It doesn't line up with the triangulation at all, but I mean, there's not really a way to do that short term because it doesn't really match. Or I'm not using the right thing. Either way, I'm not really sure. Like, I'm not using the right thing or something. Because, like, everything else lines up except for this arc. But this arc also is derived from the macro. So I'm trying to do, like, a smaller analysis of just this bottom May forward and what it would look like to get, like, a secondary action there. I think I'm right. Because it lines up really well here, too, on these tops, which is exactly where we would think the problem is. This is like where the 520s and 5s are right here. And then the triangulation on that wave is really tight. It's definitely buying in as if it's bullish right here on this bottom, which is, I keep saying that's strange. But it had a sign of weakness that would imply that you're going to go down later, but just not yet. Yeah, we did that earlier, Frank. You probably missed it. Basically, if you sell down and you can get the gap fill down here in January, you can take off right there. That's really all there is to it. You'd have to take off from like this point probably at 350, but you could leave early. I don't think it makes any sense for a couple other reasons, mostly because of this waveform. This waveform doesn't, the bigger wave anyways, the macro wave doesn't complete until, we did it earlier, I don't have it on the chart right now, but it doesn't complete until much later, like mid next year or something. So it just doesn't really, mid to late next year, it doesn't really seem like it needs to move until near March, if that, you know, even if it does move, it's like, doesn't have to do that. So anyways, this is a really different setup. Might work. There's pieces of it I like. There's pieces of it I'm not really so sure about. But it would explain why we're getting something here that looks like it's in the wrong spot. It's like building out almost like a middle of an ear or a middle wave would. So what do we have evidence-wise that suggests you only go to the 6s? As we are playing a little bit of a guessing game right now with some of these levels like 750 and stuff. Well, there is that one. So here I was setting about bearish scenarios, and I've kind of got ourselves into a pickle here because I'm now looking at all these other things. This one's pretty good. This is one of the most important ones. It does go to this breakdown here on the wave down. It was one of the ones I used early on here because of the hook, the apparent hook and drop. There's more than one. There's just layers of them, but I actually think that works. So, that's iterative too. You see how that pinches right here? And that ends up being like the low, and then it comes back up to that mark. And then this one pinches here, and then it ends up being low, and it comes back up to the mark. It's iterative walk down. It's kind of backwards looking, but it does do the same thing over and over again. Meaning the volley here, like the drop and then the bring back up, and then this has the same thing, the drop and then the bring back up. It swoops down, goes back up, swoops down, goes back up. Maybe just do that again. Just swoop down and go back up. Break out. It may seem like we're not really coming to any real conclusions here, and that's okay. Sometimes we just need to think about other things, and it's kind of what I'm doing right now. I just feel like it's worth investigating. This is kind of a December move going into Christmas, like a holiday move. Weirdly, in this particular situation, it wouldn't necessarily peak till much later, like near March. Very different than some of the other stuff we talked about. Very weak looking move compared to some other things we've seen. This would absolutely crush people in terms of volatility. That goes to $8 at the ultimatum here at the top. This is very close to that 860 mark. I'm going to flip the chart upside down. I'm going to try see something real quick. That's fascinating. Jeez. That move is so big. That move that we had up in that 300% move is humongous. It's such a huge move. It feels so out of proportion sometimes when you look at it. It's like, what the heck? It's a gigantic move. Yeah, actually, I could see why someone would look at this and think that it's gonna just like not like go up, go down again, because when I look at this helicopter view, like upside down land, it'd be easy for me to kind of sit here and try to make an argument that it's kind of already done the cat ear. It's like 1, 2, or whatever. It looks like it's already done like the 1, 2 and like pushed up. This would be the move down and then your reaction back up. And it just looks like it went flat, but it does look like it's trying to do those dips. You know? Like it looks similar. It's just really flat. But another part of me wonders if we were right about this whole thing being a little longer than expected and it ends up being like a summer move, March to June might be a really nasty time, nasty sell down time. And it does make me wonder about this as a possibility for like a longer term distribution. That still comes back later. It's all kind of key to the notion of like waves around these bigger waves, but also like the middle, squishy middle. So weird as it might seem, this actually feels really appealing to me because I was kind of stuck between two worlds of it just doesn't make sense. Why would this happen or that happen? And I couldn't put my finger on it. And the reality is, it might be kind of a mix of both. I was trying really hard to kind of fit it into this box of one or the other. I couldn't find a reason why it would be something in between. And now I'm starting to find better reason to understand why it might do that. It seems almost painfully obvious in like this upside down land because yeah, it just looks like, it really does. It looks like if it pushes this green, I know we've been talking about this. I'm back to being bullish again. It's like, what? Meaning like I'm kind of talking about a bull scenario here. It really does look to me like this is pinching into a corner, and if it breaks one way, you know, it's going to go down, but if it breaks down, it's going to break down. But like the nature of it is so misleading almost. In some ways that I'm like, I've been so back and forth, flip flop, flip flop, flip flop. Like, why does it look like this? Why is it doing this? And I'm kind of just sitting here like staring at these charts, and you get to this point where you're like, well, this one actually reconciles both, and it makes sense. It's just different. It's not what we were expecting, but it does reconcile them. It's almost like a head and shoulder motion here on the inversion. Part of me looks at this and I'm like, dude, this is just the bears like making an advancement on their side, and then they're going to come back and check it, and then they're going to hold it, and it's going to go. You can easily see how somebody would look at this and be like, oh, bears have already made an advancement. They're just going to dump the stock. It's not that hard to see it upside down, because it just looks like it's already gone, like 1, 2, and then it's going to go. And frankly, they deserve it if they get it, because we didn't make the advancement. You know, we just didn't do it. It's been really annoying, but we didn't do it. And then the other part of me is like, I don't know, man. Sometimes, again, it's like that backwards mentality of like, you got to go down first. Because I bet the same thing could have been said during this time period of like, they made the advancement, they're just going to like come back like short, make a short work of it, come back down, and then just kind of keep going. I think you could have looked at this in that particular light in 2021, and your expectation would have been that this guy doesn't ever break back above. I've got the chart upside down. That this guy doesn't actually break back above here. You know, it holds, and that's your advancement, and it's just an S-curve. We do this on the bull side all the time. We think, oh, it's going to jump over, it's going to be an S-curve. It does get to that target. I mean, it does. It stores it up. It goes there later. But in order to get there, it doesn't get there all at once. It definitely goes there. There's no doubt in my mind. You can see it visually later. But it's just like a delayed move. And what's interesting is it goes back to check. I like this now. I'm kind of feeling good about it now. Like you weren't before. It goes back to check these like cat ears from like way back. I'm always a big fan of something like that because it's simple. Instead of defaulting to the shallow creek, the one that's like right next to it, it goes for the deep one. It goes really low. Yeah, there it is, man. That's the cross and everything. So they got that good. Yeah, I think looking at this in retrospect, I've seen a lot of continuity in the two. The setup. you're still kind of back to the same problem of like, where the heck is that line coming from? We had it coming from originally from the bottom through the there, and I think it works. It's not the best. It works. It's almost like an inverted identifier of where the top is. It's like a creek top right there on that intersection. It's definitely used. You can see it hit multiple times through here. So that was the one we were using earlier. I've got it in an upside down land because it's just easier for me to see it. I've been using the creek. It's just so steep that I just couldn't imagine why that would happen that way, and like it just looks like it left it behind and like never gonna go back there again. It's still like way, way, way off. But there's other ones here you can use that I haven't yet. That one's really good. It's got 3. Son of a biscuit. What the? So if that one holds, how do you, what in the world, Booksy? What are you doing, man? Why'd you do that? I don't know. Just did it. This doesn't really have one like that back there. That's not what I wanted, though. I wanted the first cross. So that doesn't really help me. But maybe there's something similar. You know, that's what I was trying to get at. That one actually has 3 too. That's freaky. Where does that trend go? Like eventually it goes somewhere. Interesting. Yeah, we're definitely trying. We're not really succeeding just yet. This is a cluster cuss right here. I gotta be honest. I'm trying to identify like the most important pieces of this information, but I just do not see I can't see it. Forest through the trees kind of thing. Trees through the forest, I don't know. It's just really hard. It's more like trees through the forest because I'm trying to find specific points. And I'm not finding them very easily. Man. It's kind of irritating. Well, the same thing was used. It's a series of parallels, so maybe we've got those parallels on the chart. It's not just by itself up there, it's used multiple times, and this is definitely a part of that. It's an effort to try to get above that parallel structure. It might be a helpful hint for us. This one. It's at the top, it's also right there. I know, you're getting a lot of lines again. How do we get here? Thought we were getting rid of all these lines, Booksy. Dang it, that's really close to that. That's really, really close to that ascending triangle that we've had. Like, that is super close. So where is the bottom here? So another thing that gets me riled up about this chart is it's such a humongous move that it's so confusing. Looking at it like backwards, upside down, or whatever. It's like, what are you trying to look at, dude? I don't know. I mean, it kind of boils down to the same ideas, but principally, we don't necessarily come back to that pink line, for example, which would be like right here. Anyways, I don't think that's hit again. So it's not like we're not going to go backwards and just do the same thing we always do. That would be pointless. So this is ultimately not checked here anyways. It is later when we do the slingshot, it's used quite a bit in the direction of like where this move goes, and we want that for later on. But right now, it's not the most important thing. We're just looking at the possibility of a second move up. So there seems to be two pretty critical marks here. One is this jump here and this jump here. This one almost has no interaction at first because it's just this top, and it doesn't interact until it does, and then when it does, it's like, oh, it's being used. And then it actually ends up being used as like the main pivot later, or the pivot later for the next top. So it's interesting because it's not really obvious. It's a weird one. And we don't really have something like that except for right here. So that's actually above us, which is kind of backwards. I'm not sure what you would make of that. So we just don't have it. Trying to make apples out of oranges, it's not working. At the end of the day, I would suggest that this is right where that gap level is. This is really what we're trying to hold on to. And it's upside down, but this is the initial push down, and then this is kind of where it's trying to hold on. And we would say that's the same as like this area here. It's trying to. There's a bit of a range, and they're just different. This is a very high range here to here. This is smaller. But largely it's a similar kind of story there to there. So call that like it was really going up, so it'd be prelim supply of some kind, or maybe just building out a base of a new floor. So there are some challenges there. What if this chart's screwed up again? It's kind of clear that's laying on these multiple waves, but it's screwed up because I'm losing the main point. the whole idea of this being this waveform back up that then kind of reverses. I think the overall narrative that we've got makes sense either way, and that's not really giving us a whole lot of comfort today because we're wanting to see more answers and not really getting those answers. So yeah, I think it's fairly safe to assume that we are trying, though maybe not succeeding completely, to come back and retest a few levels right here. And I kind of wonder, it's still the problem with that massive upthrust still throwing me off, but I know I'm flip-flopping now, but I'm just trying to think about where does this go. Honestly, if it just from that top, it doesn't really need to go down anymore. $485 is like the higher one. Yeah, I mean, pretty much goes to like 390s. Maybe something like a flush first, and then just a big reversal. It's kind of weird, but it does work. It works with the other one too, so it's a little bit of credibility there. Boy, that would throw us way off. Because everybody would be looking at that like it's going to keep dumping. It really could just be like a massive auto reaction phase B with a spring. It's so different too. But man, it's like right where it needs to be, isn't it? I guess it would be like a move here in January, going up to January, but I don't think it would be a I don't think it'd be like that. I think you'd come up and then redistribute and come back lower. It's not the big move, it's like a big move. It'd be a big move into the end of the year. And then it would be just kind of chop for a few months. It'd be like a 60-70% move. It's bizarre because I think it's almost offensive to us that it would do something like that. But in reality, on the smaller wave, it really does work. It's a kind of an offensive move because it seems like you wouldn't want to do that and chop right there and accumulate right there. But I'd be willing to bet that there's a liquidity gap right above here too. We just haven't touched it. So it may accomplish a secondary goal that I really wasn't thinking about before, which is what about the liquidity above? I kind of just assumed that you would get it later. And now I'm wondering, what if they go get it now? Yeah, you could build out on top of, you could build out on top of the range first, and then sort of have this like nasty sell down period later. It's just like a huge upswinging cat ear. Yeah, it really satisfies a lot of the requirements that we were missing. So I'm glad I did it. Maybe you're not glad I did it, but I'm glad I did it. I am. I think there were pieces here that were just really not working. Like just don't make any sense. There was a element of uncertainty that causes headaches and annoyance and all kinds of stuff, you know? I think this might be why and how you get to the 869 area. Yeah. Son of a biscuit. That's so different than everything else that we've looked at because it just is. Like it's so different. What what if that is a oh my gosh. Well, here's where I would conclude. I think this is the most different I've seen the chart ever in the last few months. So it's like downside is like too easy. I don't know how to describe it, but like there's no real mystery about it. It's always the same two answers. It's either going to build a support here or here, and like that's it. It's not even complex. And even if it did build down low, it probably wouldn't be for like a long time unless it's just going to do some chop. Those are the same. We did three different setups. And all three of them kind of suggest the same thing, which is this area around 350 is very, very important. It's kind of a given, though. We already sort of knew that. So it feels like a waste of time because you're like, okay, you're just going back through the same things again. There are more options. There's more things that could happen here, you know, but weirdly, these are like completely opposite. But this is a very different path forward. And I find this to be slightly appealing for that reason because it actually looks like a gasp, like we're trying to run, and we're also buying that liquidity and selling that liquidity. It's a really clean setup. There's a nice 50-50 if we drop to like 390s. I was reluctant to say we did that. Somebody else had asked me in the Discord at one point if we go to like 393 or something. I was like, I don't know, man. I don't want to break that creek. Mostly because of Stockfather. He scares me, man. I get scared because I think about, oh, if we go down, that's a LSPY. We're just going to hook. But this also looks like something that would be an advancement. Like it does have the appearance of like speeding up. You know, like something is accelerating here. This is exactly what you see when you go into these bottoms. Same thing happened back here. You get these accelerations. It really does lend itself quite well. I'm not saying this is the only thing, but it's certainly there as a possibility. And it does lend itself quite well to these concepts that we had about maybe going up first then down. It's just timing is all wonky. So you actually peak once, maybe going into January, and then you build out sort of like we did in January as if it's going to run again. And it does, but it's more of like a head fake run, like a really quick dash against the rocks, and then you drop back down. It may not even be that high, but if it goes to the 869 point there, instead of short term, just kind of moving straight up, where does it then go on the flush? And this is where things get really bizarre. if they weren't already. If you flush through center liquidity, you go to 269, which follows over here in July. It seems wonky because you're like so close to the top. You're like, why in the world would you do that? Why would you go all the way up here? I don't know. Maybe that makes it less likely. Or maybe that 869 isn't the number at that point, because we could probably make an argument that it doesn't need to go that high. Sure. It could be like 820s or something. 830s. It's not a huge difference, just me thinking out loud. Yeah, and that changes the dynamic of the sell down. It's a huge sell down. But what about everything else, man? I don't know. That's where we got to go back and kind of look at, does this still kind of give you the same, potentially the same result long term? I lost a lot of people today on this stream. I get it. Ooh. Eek. Ugh. But I really wanted to go through it. Sorry, I'm like not, that just really bothered me. The fact that lines up with that and breaks down really bugs me. In a good way, but I don't want to go any further than that on there. Yeah. Ugh. We've seen it before. This could just be a gap fill. Then it doesn't have to go any lower. It could just gap fill into June. That's kind of what we were thinking for like a squeeze anyways. It could be like that. It probably wouldn't take that long to get there, but it could be a determining factor based on how high we go. It has to kind of fit like a glove. Sort of irritated, man. I'm glad I did it, but I don't know. This is a bizarre chart. Maybe they treat that gap as more of the floor, and then the drop is like the spring. That would be bizarre looking. It could work. This is kind of slow. Functionally, it's maybe not the only thing. I mean, I don't know about earnings here in February. Maybe that's where we get that pop. Right now, it sort of measures out to March, but maybe there's that pop and the drop is actually earlier, like right here. Maybe it's the earnings pop, and then it dumps or something. I don't know. Something like that may make more sense in the end, just for timing purposes. We're not there yet. It's a huge deviation. This chart is very different than the others. Very different. But I gotta be honest, it's appealing to me for a number of reasons. More so than some of the other ones we were working on for a while, because they were just not, something wasn't adding up. I don't know if you need to go down low, but there's a possibility anyway, so I'm gonna leave it there that this dropped low. it just wasn't adding up to be quite right. There were things that just seemed kind of missed. When we went through the whole day, we went through every bearish kind of setup. I think somebody who looks at this chart and sees the bear side could probably make a pretty elegant, thoughtful case for it. I think we made a couple of those today that seem very right to us and seem very possible. Yeah, and I wonder if, to some degree, there are elements of truth there where you're going to get this drop or something short term, just going to dump or something back down to, you know, that would make a lot of people certainly like not consider anything going into November, end of November as good. If this happens, you're almost immediately like, yeah, it's bad, you know, it's going to go down or something. I think in the end, what I would probably be looking for if it dropped would be some kind of indication that this is where you want to go later. And we may already have that, to be honest. Because we already have kind of a trend here that's sort of in place. So there may be, again, some indication that this actually wants to go lower later. So if this has like a nasty drop, let's say it gaps down or something like that, and then gaps pushes up in the daytime, that's where you'd want to be kind of watching carefully to see maybe what happens. It would certainly discourage a lot of people from investing in AMC. And then by the time it goes, everyone would be like, it's dead, it's a dead stock or whatever. And that's typically where AMC thrives, is with the uncertainty of things like that. So these cross-ups happening in early December are pretty backwards from what I was saying and from what a lot of YouTubers were claiming, that it would just dump. There would be all kinds of like confusion about that. Like, why didn't it do this or why didn't it do that? Well, in reality, the operator may have something just completely different in mind in terms of how we get from A to B. This just thought here just kind of makes me curious, because we really haven't spent any time in this middle here. And I think at first, I guess I just assumed that that would happen later. But the more I look at this, I'm like, there's not really anywhere else to do it. Like, when else are you going to go up there? You're not going to go back up over here and chop. So if you really want to trade between 650 and 550, you do it now. You take those shares that you've bought down here at 4s and 5s, and you go up to 650s, 550, 650s, and then you give people some like semblance of hope going into the next earnings after a long-term distribution. You do some kind of a UT motion at the very end. That's where you can go up and do your final checks here, you know, going into earnings perhaps. It's just simple. It doesn't really seem very complex to me. And I thought that would be the same idea as like coming up to sell off and then go back down. I wouldn't have looked at that if I hadn't tried to see the bear side. The idea that that could be up in March instead of down didn't occur to me for whatever reason. It's ugly. It doesn't look pretty, but it's there. Another thing this would be able to do is if it pushes up above that 50%, it can go check the next one, this orange line. And again, maybe it's something where it happens going into earnings or right at it. I don't know. I kind of have this favor in my brain of it running into earnings. It could be very tight, compressed going into the end of February, and like the party's never going to stop kind of thing. And then it stops. Get the pump up and then it's over. And yeah, you don't have to pay out as many options. You can still accomplish the same things. Some kind of news here drives the price down hard. There's the 50-50 to the gap. It still works, is all I'm trying to say. And that's the one from back here, isn't it? It almost doesn't matter to me that much what happens before this pinch point here. It's sort of irrelevant in some ways because it could go really low or it could kind of stay up here. It doesn't really make a huge difference to me. So I'm saying it goes low, but I'm just speculating about what we would call like a sign of weakness, like indicating maybe where you're going to try to go later. If they can push lower, they'll push lower, and that'll show that it's weak. But they've already technically done that. So like we've already had a lower low here, right there. So to do it again, it's sort of redundant. It's just like the same story. It would just, again, maybe present you with another trend that you could use. But the acceleration here is really noteworthy to me, this, and then that big buy-in, like why have that much volume, you know, and then sell it down and not hold these levels. Why come up and push that again and get really close to breaking the mid, but not break the mid? And you just save that move for a acceleration after into November, you might get even bigger move. I think it would be pretty fast. And this really clicks quite well with the shorter, that's the thing that really got me, is it really clicks quite well with the shorter wave. It's not perfect, like timing wise it's a little off the way I have it because I got it going on earnings or into earnings, and it was a little bit off, but it looked really similar to that other top that we looked at in the comparison. This wave did, especially down here, because it's accumulating right where it should be, but not in the right scale. It's doing it only right here and not on the big term down here. It's like the wrong spot, you know, for where this kind of emotion should happen, unless you're going to take it up and then it clicks into place. Then you're going to take it up and then come back down. So plenty to go for from there. You could definitely go on a tirade of trying to figure it out, but it's a yeah, it's interesting. Yeah, I don't really care what happens, I guess, until they intersect. And that looks more like December 6th. So this is a weird chart, but pretty important in some ways. It gives us a structure that we didn't have before for accumulating a little bit higher and also selling shares here where this sell down happened, selling it up here instead of down here, which doesn't really make a lot of sense to me. Which is why this is why I didn't really agree with Stockfather, because I'm like, well, what the heck, dude? Are they just still selling shares from like up here? Like, I don't get it. Or from like down here? Like, where are they selling? Feels like you're missing like a second move to sell down again. I just don't know where those shares are coming from. And to his credit, he's probably right that it's distributive, but it's like, I just don't know how you could keep going down the way that this is. I've been proven wrong before in that regard. Like, we've seen them sell buckets and buckets of shares when they want to drive the price low. So that's what they want to do, I guess. They'll do it. So we made a pretty good case for some BearSide today. Most of the targets were sort of self-explanatory. It hinges on not breaking here. So it's a very straightforward summary today. If it doesn't break above the 460 area, 480 area, that kind of region, then you're not going anywhere. And we have until maybe until December, but somewhere between now and then, you need to see certain things happen. You either need to see the breakout or you need to see some kind of a spring and a return back above. You can't have it any other way, really. If it doesn't go by then, it's probably not going. Likewise, we know the breakdown here could be a fake, like you could have it come back up and distribute. This was very similar to one of the motifs we talked about. So I hate to be that guy because it's like you're going to get maybe frustrated with that idea. I'm frustrated by it too. But if you don't get that breakout, you just don't have anything. It's actually pretty straightforward. So I've got a marker on my chart for 490s. Once it goes, it should go pretty far. I think it's going to do it. I'm against the idea that it's just going to go to like 5 or 6 and stop at this point. I just don't think it will. I think it's going to have like a second move and go up to the 8s. There's too much riding on that notion that it needs to come up here. I just can't imagine why you'd stop short of that. And then downside, if it doesn't hold, it just can't break out. You've obviously got enough sellers to keep it pinned. That's a given. We've been pinned for months and months and months. If it doesn't break out, then I think it's just self-explanatory. You're just going to drive the price back down to 350s, and you might have some bumps along the way. There's no real, what's the word? Mystery, I guess, about those targets. They've been the same targets the whole time, and there's nothing really new. The timing of those does seem to coincide with what we've been talking about all along, which is maybe March, April, May next year being low again. There's just a lot of them that kind of chase that direction down to that corner of the market in that time. So I think the earliest intersection we had was before March. It was like going into January or into February or something. It was like early would have been like February, but there's not a lot of support for that. I only found like 1 or 2 examples that really show a slide that just kind of slides indefinitely down. It's the simplest one because you can just say, oh, it just goes down and then LPS down, LPS down, LPS, and then breaks out. That's pretty much the only situation that we have where a big January move happens from down low and actually rips. But like we've mentioned before, at least timing-wise, there's zero indication that this would need to move. Based on everything that we've looked at, there's really no indication that this has to move at all. But obviously, we'd always say that. But until about June, like, there's no timing that, in my opinion, supports. There's just nothing there. There's no timing that really supports a move before then. It's not that it couldn't happen. It's just that it doesn't need to happen. So you're kind of left wondering, like, well, why would it? It's just not really, it's nothing there. There's no trajectories, nothing. Like, I don't see anything that would suggest that you definitely should be going in January this year and rocketing up all the way. Not that it couldn't happen. You never know in the markets. You just never know. But even if we reach those same levels that we did previously here on this parallel at that time in like January, we're not high enough. Like, we wouldn't be breaking out of the creek. So it's like, why bother? Like, you're like, yeah, we would be. Nah, maybe. I mean, it's like really tight. You'd have to basically like push out and then stay above here, I guess. Do a January, June kind of thing. The way it measures out is kind of weird. Like, we did a comparison a few weeks ago. It didn't really make sense. There's just a lot of time, on the potential here for a bottom. I just don't know why you'd rush it. So, yeah. And it's definitely moving kind of slow. So when I look at this big picture, I think there's a couple competing, maybe a couple competing waves that can be taken into consideration, but none of them are really perfect. They've all got some issues here or there. In the end, the major wave here doesn't appear to be one that's, to me anyways, to be like super fast. That would come right up there. It's almost like the delay into January makes more sense of everything else too, because taking it there, you get that breakout and then you come back down and you're on that creek, which doesn't happen here if you do it in the same way, unless you just don't come down as far, which is weird. This works pretty well all in all, because it would be really tight, but it actually works really, really well because the if you look at the peak here, if this makes a peak like right there in the 8s, and I think I made this case before, there's it just creates a natural creek right there. So then when you come back later, it's all in like the right spot, right where you need it to be. Yeah, I find that to be good whenever stuff like that works pretty well, clicks pretty well. It's kind of weird. It does a weird timing for that move, but that to me would be pretty accurate or right. It does make me wonder if we really do go down low. That's the main bear argument, is that you should be, quote unquote, should be. If you look at this situation, the main bear argument is that you should be coming down to fill that gap about the same time that this parallel's there and the intersection's there, which is frankly like now. That's sort of like the big, my opinion, that's like the biggest argument that anyone could have right now, is that you're trying to get it down here by December and you're going to do a January takeoff. Because again, I don't know what else you would do except maybe bounce. I don't know what the heck. So we've got a lot of different possibilities. I went through it today because I wanted to really see if there was anything that stood out to me as interesting or prominent on that bearish standpoint. I didn't mean to stumble across another potential bull option, but I did, and it happens. And I think that this is a good one. I think it makes sense. I don't think it's the only thing, just like everything else, but I think it's a pretty adequate one, and it would imply that you don't leave till December. So instead of being up at that top, you're down low. And then everything else that we looked at today with bear outlook had quite a bit of nasty downside incoming. I mean, all of them would imply that you have to come at least to 350. There was not a single example that I could find that was not at least 350. And then there wasn't a single example that I could find that was particularly favorable going into next year, unless you think it's just, again, it's just going to like bleed down and then pop really fast. Not that it couldn't happen, it's just it feels very unlikely, because there'd be no check on this back here, just nothing, It'd have to be some kind of like quick like inversion maybe of what we see here. So again, a lot of this is like speculative always, not financial advice kind of junk, but like I would say on the whole, there's two main levels that are just easy to follow if you guys want to follow them. One is now breaking back and finding support again from maybe like 480 to 460. Okay, that's the first big key level. If that breaks, there's no reason this shouldn't just melt up, at least for a bit, because there's no example that we found where this particular intersection right here isn't like super bullish. In all three of our examples that we kind of looked at, that's a big change of character going that way. In terms of like a completion of the range, that would be it. It's in the same pocket I know that we've already talked about, so that's where the part is like, oh, it's kind of redundant. But then the area that we really want to focus on for downside, it seems to be, again, pretty self-evident, but it would have to be like a rejection of that very clearly after making maybe one more sign of weakness. I think there's a natural kind of bent here that it could have been now because it already pushed over. So you could just slide down and fail to advance again. So you'd want to watch carefully, but it's at the same time, it's like, I think there'd be one more push because they made a low here that wasn't a low. And that's why I'm like, I don't know. I think they'd have to like break through and then try again and basically like completely fail to like advance. So there'd be like a wrap around here or something. So that would be the best way to indicate like downside, is just a failure to hold and then capitulation really low to start sliding. And I don't know if that leads to immediate drops off the face of the earth, or if we get something that was a little more mild-mannered. Like the middle example we looked at today kind of suggested that we just haven't made this move yet. And that's a different setup, very different setup, because it's like, oh, if you bounce here, you're not just going to sell off into oblivion and hit a low and then rebound into January and all this stuff. You're really going to bounce into March. You will get a little bit of a head fake into January and then chill out, distribute again. For whatever reason, I don't know why you would do it in the same exact spot, but that's the confusing part about this whole thing that I didn't like. This is what I was getting at earlier, and I've been talking about it for like the whole week. This is like a piece that's missing. It doesn't need to do that sign of rebound there. It's missing it, yada, yada, yada. But then you'd have like an implication that you'd come low, much like we see here, potentially come pretty low and then, hit the spring later. In the grand scheme of things, all of this is one downward and an upward wave, and you're really just defining the motions here. These whip arounds are really just defining the motion of it's actually simpler than it seems, because you're really just defining the motions of this bottom, which should be like a W or an M, if you want to call it that. It should look like that. And even though this doesn't greatly accomplish it, we do have some examples where, like we were looking at the example of that region in July or whatever it was of 2021. It's not exactly the best example because it's obviously really small scale. But in that example, it doesn't advance for the second peak. It just goes into the lower wave, and that's just a giant S-curve. And that's kind of where your stockfather type distribution folks sit. They're not going to necessarily care if there's an upthrust or think that there will be. They're going to look at this and say, it looks distributive, so this is probably just an LSPY that's going to drop. Not going to have like a secondary range at the top. So totally plausible. It's just, that's going to be the easy way to look at this. When we did the comparison to this region, that's kind of what we found, was like, it would be just like, oh, it's a hook. It's already done. It just does another little hook thing and then just starts bleeding out. This happened because of in part, not because of, but it was distributive looking, but in part because of the dilution. It was a long delay after this pump, into earnings and junk, until that dilution was when it was finally announced and they dropped the stock. I get the feeling if the operator thinks that's going to happen, then we're just waiting for news to drop about some massive offering. It would be like down here, it'd pop, and then they'd be like, there's an offering, and they would just dump. I can't imagine them doing it another way at this point. There's some kind of catalyst event just based on the way this is traded. So until that happens, I'm kind of still bullish. I didn't really convince myself of anything. There were some pieces there that are really compelling. I think they're worthy of time and energy spent. but I don't find them to be like necessarily the most convincing. That's just probability and math and what ultimately you think will happen. No one's going to give you the answer. I think that's a lot of people. People were kind of. I was described as being kind of pissy or irritated earlier. I am a little bit when people come on and kind of lay out stuff like that. But a lot of the times it's just because I think that there's an expectation that's too high. And I don't have that expectation for I already give, well, I'd say I don't, but I already give myself a lot of that pressure. Like, I don't want other people giving me that pressure. Trading is largely a solitary act. So you're already going to give yourself enough pressure for like, I got to make these trades, I got to make them work. You're going to have that pressure there all the time. And then if it doesn't work, you're going to have to deal with consequences of those actions, of those choices you made in that trade. So for me, it's like, I understand where the drive comes from for people to say like, hey, nobody knows what's going on, because you're going around looking at like YouTubers and stuff and they don't have the same answers. They all seem to be a little confused. They're all talking about different things and you get really annoyed because you're like, man, what is the deal? Like, nobody knows what's going on. I was upset because, yeah, it's like disparaging the work that you're doing, because you're obviously trying your best. Maybe you're not always perfect, but you're trying your best to get it right. And I give that to anybody, that kind of grace to any person that gets on and tries to show charts and talk about it for 12 hours. You know, I spoke from 8 this morning, 8:40 or whatever, till 1:20. I mean, I'm Central Time. 5 hours of just sitting here looking at the charts. It's not really, I'm not making money just doing that. I get that that's frustrating because you're like, well, why not? You could do it. Yeah, I know. But I choose sometimes to just look at the charts. I've got my positions. I don't talk about it very much. I just kind of let them be and trade in and out of them as I need to. And that's life right now for me. So I'm like comfortable sitting here and talking about it for a long time. I'm not comfortable then going back and like spitting on my own work and being like, well, it doesn't really matter, you know. Okay. You know, and then you look at people that say those things, and a lot of times I think it's just a frustration because they want someone to give the answer. Like, they just want to know, what's the answer? Why do I come on here and then every time I come on here you're talking about something different? For me, statistics are a big thing, probability is a big thing. I think there's infinite amount of outcomes. So how do you choose? You look at patterns and what's most likely to happen. You look at liquidity needs. You look at everything you can, right? We know this. And that's going to require some time and energy. Most traders who trade like day trading, they don't do this kind of stuff really. Like, this is a big kind of a swing trade we're talking about. There's a lot of potential in it. There's also a lot of danger in it based on where we are. We're at a really important place where we have to make an advancement. You know, if we don't do that, then we're going to do this and yada, yada, yada. It's not an easy place to be. I think this is not the best way. If you're just trying to trade the market and you're just trying to like get out there and make some money, like, go find a simple stock that trades, that's currently trading like a trend. If we trade a stock that's trading in a trend, we can just look at ups and downs in the trend and pinpoint. Go learn some Elliott wave and then trade momentum swings. Look for ones that already have, you know, the first, and then see what you need to confirm the third from the second wave, and then you can trade those. That's the way that you make money if you're just trying to get in and out of swing trades. This doesn't do anything really short term. And I'm going to get to a place where I'm probably getting tired of it already, and you can kind of tell it that I am, but I'm getting to a place where I'm already kind of getting irritated with the nature of AMC at the moment. And usually by that point is about the time that it starts deciding it's going to go. But I'm at that point right now where I almost don't care. It sounds really bad, but I'm almost like, all right, if it drops, whatever, I'm going to exit certain positions, and then I'm probably not going to get into anything until I see something really good. And that's to me, like, that's part of the game of the operator, is like they want to shake people out. But also I feel like it's a little dumb. Like, the operators know that they need liquidity, they need people trading it. So they have to keep it going. They have to keep it interesting. And if it gets to a place where it's like, I just don't really want to trade it, I'm not going to stress about the day to day. I'm not going to look at it as much until I see something that's good. GME, people came on the stream early and were like really excited because it popped, but it had already kind of made the trade, you know, and that's the kind of stuff that I'm talking about. Like, once it does what it does, if you don't really know what the result's going to be, there's not really any point in charting it indefinitely and saying that it's got to do this or it's got to do that. It's very possible right now the GME could have like a pullback and come back pretty low. It's set up an early support down here near 25. And that was kind of the area I thought it might come down. If it can manage to hold a reversal pattern, which it's not doing right now, like it came back up into this wedge and then dropped it again. But if it for some reason did hold a reversal here and came back above like 28.50 or something, maybe you could talk about continuation. But that's sort of the conclusion of the trade for now, you know, and that's sort of where I'm at with, to some degree, I'm kind of getting to that point with AMC. Like, I don't think it's gone, but I'm not sure it will. And that's why I wanted to sit there today and say, you know, I've joked about it. I've been really serious about it at times, but I've said repeatedly, like, if this doesn't go, we need to have an idea of what happens, because there's a real chance that we're grinding our wheels in the mud here. It's just not getting any traction. It doesn't matter how much planning you have. It doesn't matter how awesome charts you made. At the end of the day, like, you can't marry those things. They're not going to be making you money unless the price moves the right way. And if it doesn't move, it doesn't move. What bothers me the most right now is the high volume with no staying power. Like, it's just not holding the levels it needs to hold. I'm happy it's making certain advancements. Not convinced just yet until I see that hold, and it's just not doing it. It's what I wanted to see this week. It almost did it, and then it didn't. It's like, yep, whoever's trading this through the options chain with their selling of calls and all that junk, they're just not interested right now. And clearly the operator doesn't care to tear their, you know, tear their britches off, face off, whatever the word is. You guys are like, tear their britches off? That's horrible. No, they don't care to like rip it and kind of screw those people over right now, or whoever. Maybe they're part of that, you know, and they just don't want to deal with it. So there's enough people doing it, and there's enough bears selling and all that junk that you can just see it in the chart. It needs to hold this level, and it just didn't do it. So when we went into this week, I was moderately optimistic that we would get something of a turnaround. Moderately. I was still concerned about that top. Coming out of this week, I don't feel any less concerned. Like, that nothing has happened this week that necessarily makes me feel any better. It just kind of came up and tested it again. It pushed higher, which is fine. It made the double bottom, which is good, but all that stuff's fine. It's just not, it didn't hold the support. And ultimately, the fact that Max Payne yet again wins doesn't bode well. So your operator is definitely content right now to play the range. They're not interested in, if anything, all they're really doing is just finding sellers. They found some buyers down here, but there's a lot of sellers that they're finding now off of this wall again. And that's irritating. You know, we want to see that reversal pattern play out, and it just didn't happen. This would have needed to be like this week, you know? And it's like kind of the opposite. So part of the reason also that I'm doing this isn't because I'm like flipping bear. It's just, it didn't make the moves it needed to make. Once again, AMC has been a non-starter. I tied my title in. I hope you're happy. It's just been a non-starter. It's refusing to take off. It's refusing to move over the levels. The setup was there. It's really clean. Maybe it could still happen, but right now it's just not really moving. And I don't really feel like there's any reason to get excited unless it really moves over that level. And I had a feeling at the beginning of the week, you know, arrogance goes before you, right? It's like, remember Monday and Tuesday being like, oh, well, you know, I told you maybe this happens this way and blah, 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 blah. It's like, of course that's going to come back to bite you, you know? It's always going to come back to bite you. You should never boast about a move until, better just not boast. How about that? Just don't boast. And then you won't be stuck in those situations where you're having to eat your words. That's the lesson. Don't be boastful, right? So as soon as you think it's going to go your way, it doesn't. And then as soon as you think it's going the other way, it's reversing, you know, and you're like, oh, maybe I was right, you know? So I don't like that. Basically, it just resets. All my expectations are just reset again. This is like exactly what happened back here when, to some degree, when we like came up top and then we dropped. I was like, well, now we got to reset our expectations, because what you're looking for back here, we were looking for that advancement and the hold. And you're like, nope, didn't happen. Okay, where's the next place that might happen? Maybe over here. Didn't happen. Okay, now it's going to be a while. It's the same thing. You just, you see it week after week here. The pieces that were really positive were the fact that we were not going back to 450. Like the fact that we were holding above up here this week, early in the week, that we're making those advancements and holding above, that to me was the selling point of the week. I mean, that was the big, to me, that was the big news, you know, like that it wasn't breaking through. And then we did. So I'm kind of irritated by it, as you can tell. I'm not as surprised as you might think I am. I sort of had this feeling in the back of my head that I was going to have to like eat my words and say I was wrong and all this crap, like I do every other week here lately, because it just doesn't want to go the way you want it to go. It still made a higher high, could still make a higher low, could still break out as soon as next week. But until we see that move above, just not much to say. So it's a bit of a dead, I hate to say it, but it really is. It's kind of a dead play to me until we get that move above and it holds. Until that happens, I'm not feeling it. You got to get above this like 50% marker here on this big downtrend. So some people, some days I'll be bullish without any real reason. I'll just be like, no, it's gonna do it. I got a feeling, you know, gut feeling, blah, blah, blah. Not really feeling like that today. So volume 6 million. Yeah, it's low. I mean, it's a pullback on lower volume. That could be fine, but when you look at the overall volatility here and the spike in volume and this little pocket, it doesn't look good. You don't want to see a spike in volume like that and have high volatility to boot. That's typically more a sign of distribution. So I'd really like to see the volume be through continuation, not through a topping region, right? So that's the difference, I suppose. This is not volume of continuation. This is volume through a topping region, like high volume into a topping region. GME's volume has been slowly dropping, as is RSI, since it's been climbing here. So there's not really anything there to noteworthy to say about the volume being low. It's just, it is what it is. It's been going down steadily anyways. And we said this before, there was and not to be a complete downer today, but there is a similarity maybe to what happened back here to some degree. There's a similarity to what happened back here, you know, with the volume drop, and then this being maybe a backup with a potential SOS. That's what I would be looking for if you are going to get continuation on GME. And maybe that's where AMC finally runs, you know, when we least expect it. If you are going to get continuation, this is a little different because it extended up 1, 2, 3 times instead of going down like it did in May, which is a little healthier. It actually did an upward extension like 3 times here, here, and here. But it, in theory, could it be very similar? Sure. So if this were to drop and maybe goes to like 25.50 or something, it could make a higher low and then go up in SOS and then like take off. It's not impossible, you know. It's just at this point it's a hard one to see because it's the way it's advanced is a little different. There's a lot more selling for one, but also like a lot more selling, but also like a huge amount of selling on some of these pullbacks, but also that this coming down is really important. That's a really healthy move. Like that's a super healthy SOS. It's making lower highs as the volume is dropping. It's making higher lows. It doesn't ever make like a lower low here. It kind of flattens out and then this comes down slightly. I mean, it's a super, super healthy SOS. You don't see this except in like textbook kind of stuff. I mean, it's perfect. Where we're at right now does not seem quite as healthy. There's a huge amount of selling on this back burner. The rise is a little odd. It smells a little bit more like an S-curve or something if it does break out, which is sort of the argument that I would make anyways, that this would go up to maybe like the 38 mark if it's going to break out. Like, I don't think it would be like the last time where it just rockets to the moon. Because the way in which it's maneuvering here on this rising action with the volume, really it's buying volume looks like it's coming down. Selling volume looks like it's increasing. It's kind of strange. It just reminds me more of like an S-curve. There's a lull in the middle, but not much. So... and IWM's continuing its retracement. Nobody really thought this was going to run forever. It looks like it's coming all the way back down to check that creek jump it made. It's kind of something that I wish I had not erased, but I actually had that. I guess it doesn't matter at this point. I actually had this coming up, not as high, but coming up here and then dropping back to refill the gap. Now I wish I had left it on the chart because it looks really right, but c'est la vie. I deleted it, so we're coming way back down, which is fine. You need to come back and retest that area that broke out. At the end of the day, it could come pretty low, even though this is like not filling the gap at 226. You can come down pretty far. This could come all the way back to near 222 even. Technically, it'd probably be okay. So clearly, some people think that this is overbought and ready to be sold down. That's another thing that kind of bothers me, man, because if you look at this did that move, push up, build up, push up. It's like, where the heck is it, AMC? This can't just be it. And then yet that's what it looks like. It's like push up, build up, push up, not going anywhere. It's like, great, thanks. Thanks for that AMC, appreciate you. Yeah, I don't know. I don't like that the volume kind of like escalated here the way that it did. And this widening upward, it just looks ugly. Where am I? This is IWM. TANH was another one we were going to look at real quick. I think that was what it was. Doge kind of doing what was expected, coming back to here. It's close. Nothing really new to say about that. Was it TANH or TAHN? Right. So this had the appearance of a wave that was breaking down, and so there was only really one of two options. One was that it would come down here. It looks pretty darn close. One that was to come down here and bounce out and chop in this area. This must have been a little while ago because this was all November. Yeah, November. So it looked like there was a marker down low, and it would probably come down to like 13 or 14 cents, and then it would probably chop here. And if it did not recapture here, it would just continue. I guess you could say chopping. And that's sort of what happened. So it did not recapture. So that would be like a fast reversal. It could still happen. It's just not happening yet. That's like if a wedge breaks down and then it reverses really hard, it goes the other way. Right now, it has more of the appearance, again, I don't like constantly talking about AMC's 2020 bottom, but it does have that appearance of like an LSPY that's trying, it may fail, and then come back to the floor. So that's kind of where I'd be at right now. It looks a little bit bearish. I don't know if I'd take it much further than that for the moment. The fact that it held this level after feeling like a gap is good. But the chop itself, so. It's a little like AMC, to be honest. Kind of wish it wasn't. Frankly, at this point, even if it came up, somehow like had a squeezing motion, it'd have to get above like 20 cents here. There's a pretty massive trend right there. It hasn't checked. So it could happen that it comes back up and it still could drop again. I mean, this could be a really long-winded phase B. This could take a really long time. Like, there's no telling. So, can't really go further than that. We're just kind of in the middle. Do I want to even look at WTO? It's probably not good. It's not horrible. It's kind of just sitting there. It actually looks right. It came back to the floor. This is the test. It needs to then rebound. And I said maybe as early as Monday because of where this was. I'm just going to scoot it over again. But it'd have to come back above 40 cents. SOS essentially right here, and then break again. Otherwise, it ain't going anywhere. It's just pinned. That's it. We've done all the rounds. It's been a long, long, long day. So I'm going to take it off from here and wish you guys a good weekend, and we will catch up with you later. Maybe I'll do a recap this weekend, try to summarize some of these thoughts on the bearish stuff. We'll see, Jason. I'm not sure. There was a huge institutional ownership rise in AMC too when it popped in November, December of 2020. I mean, there's a massive amount of volume, on balance volume that came in there. It still went down again before it ended up going. So, just food for thought. That's where the on balance volume has a major strike or a spike. So, it's a good example of like maybe a spring-like motion building up before it happens. All right, guys, have a good weekend. I'll talk to you later.